What do you think the Fed should do?
I think we're in a situation where we can taper, and I think setting those parameters the right way. We don't want to jar markets or anything, but I think it is time to end these emergency measures.
Forgive us, Mike. We just wanted to hear from Bullard. So what's your take on your conversation?
Well, he's been one of those who were saying that the economy is recovering faster than anticipated and we might have to do it sooner. Now he's crossed over into saying we should end these emergency measures. And there are others who sort of feel that way. We'll have to get exact comments from them, but people like Rob Kaplan down in Dallas, Loretta Mester leaning a little more that way, Esther George. Some of the more people with inflation hawk backgrounds have started saying the same thing. But then we talked with the Chicago Fed President, Charlie Evans, a little later in the morning, and he said, no, I'm still worried that something could go wrong in the economy, so I don't think it's time to take our foot off the accelerator yet.
So, Mike McKee, what does this all mean in the context of what they said and then also what we heard from Fed Chair Powell earlier today?
Well, where the chairman is where the Fed is going to be.
Right.
I think what Jay Powell was trying to do was steer a narrow course between the two camps. And at this point, the Fed has told the markets we're not going to start raising rates or we're not going to start tapering anytime soon. And they're worried that their credibility would be at stake if they changed that without data that compelled them to do that. Now, Jim Bullard sees some compulsion in the data, but others don't, and they think that perhaps we have farther to go on the employment side in particular. They certainly have achieved the inflation goal. So it's probably status quo for now. Not a lot of change, but the pressure's starting to build.
Mike, I got to say that I always get confused about, these are all prominent, individuals from the Federal Reserve, but should we pay attention to? I remember a column on the Terminal. It was like, listen to Jay, listen to, I think, Rich Clarida. Like, who should we really pay attention to when they say something?
Well, in a generic sense, you pay attention to the chairman. Now, if the chairman were unpopular or giving bad advice or something like that, maybe you wouldn't listen as much. But right now, Jay Powell seems to be the leader of the Fed. And so you're going to listen to Jay Powell, you're going to listen to Rich Clarida, and you'll listen to John Williams, who's the president of the New York Fed. And sort of by tradition, the president of the New York Fed never disagrees in public with the chairman. So if John Williams tells you something's going to happen, you pretty much figure that's what Jay Powell is thinking.
Dave Wilson, come on in here and give us an idea of how the equity markets are digesting what we're hearing from the Fed chair and also members of the Fed throughout the day.
Well, you've got stocks kind of working their way down at this point. The S&P 500 near the lows of the day. Interesting, though, that utility shares are the best performers among the 11 main industry groups in the S&P 500. And in fact, one of only two that's higher at the moment. Consumer staples, food, beverage, tobacco is the other one. We're seeing declines among energy stocks, among technology stocks, and so the big tech type groups as well. So that includes communication services and consumer discretionary. So put it all together, a bit of pullback here.
Why are we seeing tech stocks take such a hit today?
4 steps in a stumble. How's that? Because if you look at the S&P 500 Information Technology Index for the month of July, rose 4 days in a row at the beginning of the month and then retreated. And it's been up the past 4 days. And again, it has retreated. And it set a record yesterday. It's like saying, why are we down in the S&P 500 when you had a record the day before? There is some fluctuation. And it's going to be a couple of weeks before you get earnings reports from the biggest companies anyway. So, it's just a bit of back and forth here. But in general, it's been the technology type shares that have been leading the way again, as they did, looking back to last year, before the value stocks started to pop up their heads.
And many have had a great run. Listen, we are looking forward to talking to a wider swath of CEOs. We're going to talk with Arnold Donald. We'll get a good view into the leisure industry in just a moment. Michael McKee, CEOs do give us such great insight. What do you want to hear from CEOs? What would you want to hear from a CEO like Arnold Donald when you have such a clear idea of what's going on in the economy?
Well, what people are talking about here and what people are talking about in the Fed are the fact that we've seen companies raise salaries and wages or offer bonuses to avoid raising salaries. And so we are seeing a little bit of that wage pressure. but do they keep doing it? Do they keep raising prices on their goods and then having to pay their employees more? That's the question. You know, is this a one-off that you're raising prices to cover your costs, or is this going to be the start of a cycle? That's what's really going to matter to the Fed.
So, Mike, next time you have to do that difficult job, I mean, oh my God, just let us know. Maybe we'll help you out, carry equipment, that kind of stuff.
I already volunteered. I emailed them earlier this week.
We're ordering.
Yeah, you're welcome to join. The more the merrier out here.
We're ordering sunglasses and hats, cowboy hats.
Just sounds like he's in the West right now.
All right,
a breeze, relax.
Nice suit.
Yeah, it's
tan,
great.
Looks kind of
Check
cute.
it out on YouTube. It's pretty cool.
All right, Michael McKee, of course, international economics and policy correspondent there from the Rocky Mountain Economic Summit in Idaho. Dave Wilson's going to be back shortly with his chart of the day.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number is 15.
All right, that means on this day in 2006, 15 years ago, San Francisco podcast company Odeo,
Yeah, that's how you say it.
all right, launched a side project, a way to send SMS messages to groups of friends at once. Is it SMS?
Yeah, it's old school though.
I think it is, right?
Yeah.
It was called TWTTR.
Sounds
Sound
familiar.
At the time, the vowels, of course, came later. Twitter usage took off at the South by Southwest convention the next year, and the company went public at a value of about $31 billion in 2013. What's the market cap today? If I can pull it up.
We're both frantically pulling it up right now.
Yeah, I'm a little frozen here. All right, let's get to world and national news. She's probably got it at her
54
fingertips.
billion.
54 billion.
Don't
All right,
have it handy, sorry.
take it away, Nance.
The president is hosting German Chancellor Angela Merkel at the White House today on what is expected to be her last visit to Washington as head of state. They'll be discussing a variety of issues, including the touchy Nord Stream pipeline program that runs from Russia to Germany. They're also expected to discuss the pandemic. You can hear their joint news conference around 4:15 Wall Street time right here on Bloomberg Radio. President Biden earlier today announced that families in America are now seeing relief in the form of child tax credits that arrived today.
For every child under the age of 6, a parent will get $3,600 a year. For every child 6 to 17, they'll get $3,000 per year.
Biden wants these child tax credits to be made permanent. A plan is taking shape within the administration to deal with ransomware attacks.
The Biden administration has a plan to crack down on the use of cryptocurrencies and ransomware attacks. Sources tell Bloomberg News they'll rigorously trace the proceeds that are paid to hackers, and the U.S. strategy will involve bounties of as much as $10 million for information leading to the arrest of cyber attackers. The White House has a task force in place to help disrupt ransomware operations, with Treasury and State Departments working together on improved restrictions on money laundering. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So this story on the Bloomberg certainly coming to our attention by Max Reyes and Mary Beekart. And they are together writing about Wall Street itching for office return as the variance muddy recovery. These are the conversations, Tim, that you and I have been having with health officials, CEOs, just trying to make sense of, are we increasingly moving forward, or it's a little forward, a little bit back?
Well, unfortunately, with bank earnings this week, we've been able to hear from these chief executives about how they're thinking about that return to office. So, for example, Morgan Stanley Chief Executive Officer James Gorman said, quote, "At the beginning of COVID in February of 2020, when I was asked about how this would end up, I think I said that I felt 80% of all employee hours worked would be done in one of our offices. And he said, hey, that's probably where it's going to end up. Not 100%, but not 0%.
But I also do remember him talking about whether or not he was going to need all the office space going forward, seeing how people were working so well. B of A, Bank of America's Brian Moynihan said he hopes to bring younger staff in front of their bosses soon, but the virus will dictate plans. Citigroup also watching the evolving Delta variant very closely, forging ahead, though, with its flexible approach. If you remember, I think they've got a multi-pronged approach to some extent to coming back.
Right. The question is, Carol, to what extent do these companies have to compete with not other financial firms, but perhaps tech companies that might attract employees who, with the idea of, okay, well, you can come work for us and you can work in the office 2 days a week, you can live in a different place. And how do they do that with talent retention? We heard about the rising costs for banks this week because they want to make sure that they are attracting and retaining talent. And I wonder how that factors into this.
No, I think that's a good point, because increasingly financial firms are technology firms, right? Everybody
say that, and they love to say they are.
Right.
They really
especially
do.
in the face of fintech competition. But increasingly, companies at large have a technology backbone, just in terms of how you communicate, how you track data, consumer information, and so on and so forth, or client information. And so there's going to be competition, and engineers and the like will have a lot of flexibility maybe about where they decide to go or where they want to go.
And how many of them stay in traditional finance, or how many of them go work for a tech company in a finance role?
We'll talk a little bit about wages and workers and finding the necessary staff. We'll do that, among many other things, with the Carnival CEO, Arnold Donald. He's coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters traders. I'm Charlie Pellet. Dow, the S&P, NASDAQ 100 index, all declining. 10-year yield right now 1.30%. 10-year up 13.30 seconds. Stocks are extending losses. Treasury yields turning lower again as Fed Chair Jay Powell's persistent dovishness raises concerns about the sustainability of the economic recovery. S&P right now down 25, a drop of 0.6%. Dow Industrials down 31, a drop of just about 0.1%. NASDAQ down 1.1%, lower by 157 points. NASDAQ 100 index down by 1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week here on Bloomberg Radio, on YouTube, and of course, around the world here. What we are going to get into is in the cruise industry, because we are here with one of the CEOs of the world's, or we are here with the CEO, I should say, of the world's largest cruise operator. The company, by the way, launching its first cruise from a U.S. port. They did that on July 3rd out of Galveston, followed by their first cruise from Port Miami. That was on July 4th. He was there. And then Carnival Breeze setting sail today out of Galveston. That's happening at 4:30 p.m. Eastern. So let's get to it with Arnold Donald, President and CEO of Carnival. Arnold, it is great to have you back with us. I feel like you and I have been talking about a restart, things getting back closer to normal for a long time. How does it feel? You've been waiting a long time for this, especially to see those ships out of U.S. ports.
You know, Carol, good afternoon, first of all, but it is a phenomenally exciting, fulfilling feeling, not just because we get to welcome guests back on board our ships, but also because there's so many people who are dependent on cruise for their livelihood. You know, port workers, Uber drivers, taxi drivers, the destinations around the world all have so many people dependent on the industry, and people providing provisions to the ships and servicing the ships. So it's a very exciting time to have guest operations once again out of the U.S.
How's it going so far with these ships that you have? And I know you've had ships going on over in Europe, so you know you have some experience in how things go post-pandemic. How about with the U.S. ships specifically? Because I believe off the Galveston ship, passengers have already come off. How did it go? Was there any COVID cases? Were there any concerns?
You know, it's gone exceedingly well. The ships in Europe, as you pointed out, for our Costa and AIDA brands, have been sailing under different protocols because largely there people are unvaccinated. So physical distancing, universal testing, additional medical screening, et cetera. So far here in the U.S., we've been sailing under the conditional sail order issued by the Center for Disease Control, which focuses on having most of the guests vaccinated. And that allows for a more open cruise. And they've gone very, very, very well. We just got the Net Promoter Scores back from the guests, and it's the highest scores we've had in quite some time. Unlike a lot of the other folks sailing, we had a lot of people on our ship. We had over 2,600 guests on one ship, over 2,700 on another. We've already into our second week of cruising those ships with even more guests on board. And the experience has just been fantastic, and it's a very rewarding feeling to finally get back out at sea, exceeding guest expectations and just developing lifelong memories for people.
Arnold, give us an idea about demand right now, because 2019 was a record year in terms of bookings. Where are you right now?
Okay, Tim. Where we are right now is what we've told you back in June 24th. You know, we're between quarters with publicly traded companies, so we can only say so much. But at that time, we indicated that our bookings second half of 22 were well in excess of 2019's kind of record bookings, same point in time.
Wow.
And right now, it's hard to talk a lot about occupancy and whatnot because of all the rules and regulations and restrictions and what have you. And some things we self-impose on ourselves, for example, in Europe, where we've absolutely reduced the number because of the additional protocols in place for those unvaccinated cruises. But to make a long story short, demand is robust. We have plenty of demand. We're bringing the ships just in a few at a time. We have over 85 ships in total. Today, sailing in the U.S., we've had 3. We're about to launch new sailing, as you mentioned, the Breeze, which will be our 4th one. And then we'll have 3 ships in Seattle later this month. And then July 31st, Mardi Gras for Carnival. So our newest ship, and just an unbelievably fabulous ship with the first roller coaster at sea.
First roller coaster at sea. Can you give us an idea of pricing power that you have right now, considering demand is so strong? And look, I'm asking this question in the context of the inflation data that we got earlier this week. People are getting back out there. Companies are raising prices because demand is so high. What is your pricing power right now?
Yeah, well, pricing is strong. There's no question about it. There's far more demand than there are cabins available, especially here in the U.S. with the sailings we have. So pricing is strong, and we expect it to continue to be strong, not only because we're the best vacation experience there is, but we're the best vacation value there is, even with stronger pricing compared to the equivalent land-based vacation. And so we're expecting a robust environment in demand, which leads to a robust environment for pricing, especially with the staggered introduction of ships coming back in, which is going to happen, over time as destinations begin to open again.
Are pricing similar to what we had pre-pandemic, Arnold? Are we seeing it similar to that, or is there a little bit more flexibility?
Right now, I would say, if you look at bookings, I can only say what I've said during the business update.
Right.
But the fact is, pricing is stronger. Is stronger than what it was 2019.
So, what's interesting, too, is I have to wonder, Arnold, you came in after some crises at the ship, really righted the company. I do wonder how difficult, though, it is to kind of assess your outlook for this industry, especially, we talk every day about the Delta variant and the increases that we're seeing once again, right? And you have different rules and regulations. We just had a headline, Canada to lift the ban on large cruise ships as of November 1st. That just crossed a few minutes ago across the Bloomberg. How difficult is it to assess the outlook and get a hold of the business, especially when, once again, we have something like the Delta variant?
Well, I think, so several comments. First, everyone should get vaccinated. It's the best way to protect themselves and those that they love. So everyone should try to get a vaccination unless they have a medical reason or a deep religious, belief to not. Other than that, they should get vaccinated. Having said that, there will be other variants. There's the Delta variant, there'll be other variants. And what we have to do is learn as a society overall how to live with this virus and the various variants that can come. And the best way to do that is to take the advanced medical knowledge that exists and take advantage of it. So vaccinations now, later there's also advanced treatments if someone does happen to contract the virus and having challenges with it. And so, and then the other measures we need to take if there's a variant that shows up, which hasn't happened yet, that is threatening to those who are vaccinated, then we'll have to return to protocols of mask wearing and physical distancing and things we've learned until the medicine catches up, with that particular variant. But keep in mind, we've dealt with viruses for decades. The cruise industry has had to deal with Ebola and Zika and SARS and MERS, and the world has had to. And now the world is getting a grip on this particular virus, and plaudits to all the scientists and technologists and all the people, the first responders, everyone that have gotten us to this point, which is a phenomenal thing from something that we didn't even understand 15 months ago to multiple vaccines, advanced treatments, known protocols to mitigate spread. And if we act responsibly, we can manage this.
We are talking with Arnold Donald, of course, the CEO of Carnival Corporation. We do want to welcome all of our viewers on Bloomberg TV. We are live on Bloomberg TV, Bloomberg Radio, and on YouTube. Hey, Arnold, though, let me push a little bit on the Delta variant. I mean, how does the Delta variant at all impact your restart, especially here in the United States? As we said, Carnival Breeze going out shortly later this afternoon. Are you seeing any impact on bookings or any cancellations as a result of that?
No, we have not. We have not seen a major impact. Again, I think the scientists around the world are pretty much aligned around the fact that being vaccinated prevents two things. One is possibility of contracting a virus, but then if you do contract it, probability that you'll have any serious effects from it. It also appears, and there's a little more debate around this, but the scientists seem to agree, that it also mitigates the spread of the virus. that if you have it, you have less of a viral load, and so your propensity to transmit is a little bit less. So we have not seen a big impact from it. Obviously, it will impact access to destinations, places where people aren't vaccinated yet or just not enough of the population is, so it can slow down progress that way. And then we're going to pay close attention, but as we always do, we'll follow, the authorities around the world. We have to be in compliance everywhere. And we'll follow the good counsel from the leading medical scientists and personnel that we work with constantly.
Hey, Arnold, you've seen a lot of economic cycles, and I think we are trying to assess in our conversations with everybody here at Bloomberg and on air, what is the economic outlook? You'll hear from one airline CEO says things are gangbusters. Things are going, really, really strong. We hear from the Fed chief. We hear from Fed members that, the Fed chief reminding us once again that, listen, it's going to take time to get back to where we were pre-pandemic, which is why he is still supportive of some of the measures that the Fed has taken during the crisis. How do you see it? Is the economy going gangbusters, getting closer? Is it going to be for a little bit and then calm down? How would you describe it?
I'm not an economist or a prognosticator extraordinaire or anything, but my experience right now is the economy is strong and that there's a lot of pent-up demand. People are anxious to travel and to enjoy things again. They've been for quite some time on lockdown or near lockdown. And so there's a lot of excitement and interest. People are having a hard time hiring people for a period of time because of stimulus packages and other things.
Are you having problems hiring people?
Well, we recruit from 145 countries around the world. And so for us, that's really not the issue. On the shore side jobs, as we ramp up, I'm sure we'll face some challenges in some areas.
Hey, Arnold, given that you recruit from 145 countries all over the world, how do you ensure that your staff actually have access to vaccines, given that the vaccine rollout across the world has been really uneven?
That's a great question, Tim. And we are very grateful to so many people around the world who have helped us gain access to vaccines for our crew. Because the reality is we can't, as a commercial entity, directly access the vaccines. So it's the localities like Miami and Galveston and here in the U.S. and other places around the world that have made the vaccines available. And they do so because they know the economic impact of crews. And so we can get our crew vaccinated that way and have been around the world.
So using the United States to vaccinate crews from around the world?
Yes, we're getting vaccines around the world. We're also vaccinating in the UK and other ports around the world.
And my understanding is, Arnold, that, in order to get a ship out of a U.S. port, you have, I think, at least 95% of passengers and 95% of crew vaccinated. Is that correct? Is that the minimum?
That's under the conditional sale order that the Center for Disease Control currently has in place. So you can sail that way without a lot of restrictions. The guests don't have to physically distance. They don't have to wear a mask. We recommend they wear a mask anyway, but they don't have to. And so if you want to sail under those conditions, which are the ideal conditions.
And I know you guys, and I know with talking with your team and with you, that you guys have been back and forth with the CDC and real, trying to get up to date and keep up to date with the conditional sale orders and the changing conditions. What is the CDC telling you at this point? Are you at all concerned that they're going to kind of pump the brakes when it comes to the restart here in the United States?
We have a few remaining challenges to get through. For example, if you wanted to sail with less than 95% of the guests vaccinated, some of the protocols that are currently mandated make it almost impossible to sail in a manner that works for the guests. And so we continue to work with them to modify those for those situations where that would ultimately make sense. But we're optimistic that the CDC, along with the Biden administration and the various cabinet members and their staff that have responsibility for servicing the public health and making sure the economy is strong, that collectively they'll weigh in and make the right decisions, and we've made some meaningful progress. Our objective would be that we would be treated the same as other sectors in travel and leisure.
What's the message that you have for somebody watching or listening right now who still may be uneasy about getting back on a ship in this environment?
I'm sorry, Tim, it faded out. Could you repeat the question,
Yeah, I just
please?
was wondering the message that you would have for somebody who's listening right now or watching right now, if they're potentially uneasy about getting back on a ship in this environment.
I'm thinking about our own Charlie Pellet, who has gone on a lot of Carnival cruises, loves to go cruising, and can't wait to get back out there. What's the message that you would, give to somebody who's looking at the industry, maybe a little hesitant and wanting to get on a ship? What would be the message you would say to them?
Oh, the message is simple. Come aboard. Get vaccinated, please. But if you're vaccinated, come aboard and enjoy yourself. You're going to have a safe cruise, and you're going to have a great time.
Hey, those recurring cruisers, I know, like our Charlie Pellet, who works here at Bloomberg, they give you guys a great window into future cruises. Talk to us a little bit about that, because I know there's millions of them out there, right? That take a cruise, come back. I remember being on your ship and sitting in the, in an elevator, and people cruise, my 6th cruise. But it gives you, right, some visibility in terms of where you're going. What are you seeing on that front?
Oh, in terms of the future, you mean for the industry?
Yeah, and for you specifically, yeah.
Yeah, the future for us and for the industry is super bright. Keep in mind, prior to COVID, about 500 million people a year took holidays or vacations around the world. We were sailing as an industry 30 million people a year. We sail a little over 13 million across our 9 world-leading cruise line brands. And when you think about it that way, you realize what the opportunity is, where the best vacation value there is, where the best vacation experience there is. And so we have nothing but upside. We were on a great roll as an industry prior to COVID. We were growing. Things were great returns for the shareholders, great experiences for the guests. And we'll be back to that. We'll have to stagger the ships in. But by spring next year or later, assuming the trajectory for the pandemic continues the way it's going, we'll be back to where we were, exciting people and enticing more and more people to the great experience that a cruise is.
So I have to say, our audience, financial audience, and folks on the terminal sending me a message, and they're like, okay, so ask Arnold. We're hearing it. He's very optimistic. It's positive to see another U.S. ship or another ship out of a U.S. port. You did, though, guide for positive EBITDA by the summer of 2022, provided the full fleet is up and running, right, and we're back to those more normal occupancy levels. Do those, and I know earnings are coming up, so you tell me what you can tell me, do those assumptions, though, Arnold, still hold?
I would say that clearly where we're at now is maximizing cash generation. We have 14 transactions during the pause, and now a 15th as we refinanced one of those, and to raise $23.6 billion. A lot of it in debt,
right?
Either senior or secondary. But the bottom line is, we want to accelerate repaying that debt. We want to return to the credit ratings that we had, the strong credit ratings that we had pre-COVID. And in doing so, we'll create great value for the shareholders. And the way for us to do that is to be sailing again, generating cash. We have a more efficient fleet. We eliminated 19 of our least efficient vessels. We have new vessels coming in that are far more efficient, a strong environment with robust demand, and it's just it looks very positive going forward.
So positive enough that you think you can get back to BBB territory on your debt anytime soon?
I think anytime soon. It's going to take us a few years to get back to the very high credit rating that we had before. But we should be able to do that, assuming that the trajectory stays with the pandemic and things continue to roll.
I'm interested to hear about how you get that next generation of cruisers to become.
We got to get Tim on a ship,
customers.
Arnold.
I've never been on a cruise, for example, but I feel like I would be somebody who you would want to reach, right? I have a young family. How do you get us to become that next generation of cruisers?
Well, first of all, we sell a lot of millennials now. So the cruise is by definition multi-generation. And so many people of all ages have cruised. We sell more children, for example, on our Carnival brand than any other line in the world. And so we have multi-generational experience already. The second thing is that, especially for millennials, they love experiences. Everybody does, yeah. but they are even more predisposition for that than others. And so that's what cruise is. And all of our data shows that cruise really resonates with that generation. So for you, Tim, we just got to have you experience it once, and you'll be hooked like the young man who told me on the ship the other day that he had 2,000 days of cruising with the Carnival brand.
Wow.
Talk about a recurring passenger.
I've been pushing him out to the water. I'm just going to tell you, Arnold. Hey, last question. The events of the past year, how has it reshaped your long-term approach to the company and the industry?
I'm sorry, could you repeat? I'm getting a little feedback.
No,
Say again, please.
our apologies. Arnold, how have the events of the past year kind of reshaped your long-term approach to the company and specifically the cruise industry? And just got about a minute.
I think our long-term approach is the same. First of all, our highest responsibility, and therefore our top priority, always, is compliance, environmental protection, and the health, safety, and well-being of our guests, of the people in the communities we touch and serve, and then of our shipboard and shoreside personnel. So that is our foundation. That gives us the freedom to operate, and that is at our core what we have to do exceedingly well to put us in position to exceed guest expectations and generate great returns for shareholders.
All right, we're going to have to leave it there. And our apologies. I think we lost the audio there. Arnold, thank you so much. Arnold Donald, Chief Executive Officer at Carnival Corporation, joining us from their headquarters in Miami.
Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nancy.
Hey, Tim. Eligible families are receiving money today from the expanded child tax credit. They're receiving up to $300 a month for each child under 6, up to $250 for children over 6 and under the age of 18.
It's one of the largest ever single tax cuts for families with children. And it's a reflection of our belief that the people of this country who need a tax cut aren't the folks at the top. They've gotten plenty of tax cuts. They're doing just fine.
Biden says it'll cut childhood poverty rates in half. Republicans warn, though, these payments will discourage parents from working and will ultimately feed into long-term poverty. Justice Stephen Breyer may be facing pressure from some liberals to step down from the Supreme Court, but he doesn't seem to be feeling it.
At 82 years old, Breyer is the longest-serving member of the High Court's liberal wing, but in an interview with CNN, he says he hasn't decided whether to retire. Whenever he does, he says his health would be his main consideration, followed by the impact on the court. Liberals have been urging Breyer to step aside while Democrats have the majority in the Senate, but for now, he says he's enjoying seniority and the power it gives him to assign the consensus opinions he favors. In Washington, I'm Nathan Hager, Bloomberg Radio.
Ghislaine Maxwell, a longtime associate of disgraced financier Jeffrey Epstein, is facing tax warrants from the state of New York for owing nearly $1.6 million in personal income taxes. That's according to the New York Department of Taxation. It just adds to her legal woes. She's already pleaded not guilty to sex trafficking counts and charges she enticed and groomed underage girls for the late Epstein. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. I feel like this is a story right up your alley.
Yeah, it is. It's about Wall Street bets and Reddit, the meme stocks. And guess what? They're not just meme stocks because Reddit traders right now are upending the world of credit investing too. This was the type of masterstroke that could make a Wall Street career. Remember, Jason Mudrick, okay? The financing of AMC's at the last height of the pandemic netted his hedge fund hundreds of millions of dollars in just a few months. Remember what happened a few months ago, right?
Then it was gone.
It was gone, yeah. So in a blink of an eye, it was gone. Options contracts meant to hedge the bullish wager went haywire as retail traders flocked to AMC's stock, pushing shares to once unimaginable heights and costing Mudrick Capital Management all of its gains and more.
Well, and it's just what's interesting is you're finding these new trading platforms, right, can upend the financial markets maybe in unexpected ways, right?
Yeah, you are, we haven't talked about this much lately, Carol, but I wonder when we start to see more questions about SEC enforcement or a question about regulators getting involved.
Right. And what's interesting is this gets into the world of distressed investing, right? It's another part of our financial world, and you see a lot of folks who pick up distressed assets and do really well. We write, according to our Eliza Ronalds-Hannon, that distressed investors have long had to have thick skins, taking criticism as predators, even as they sometimes rescue firms no one else will touch and generate returns for pensions, endowments, and foundations. Life in the business, though, getting even harder as they can no longer count on a predictable stock market to hedge massive multi-pronged bets. That's it. The retail trading has created this level of volatility that we're like, wait, where did this come from?
Well, you also have to wonder about shorting and the way that this has made investors who have taken short positions in the past think differently about shorting, because you could, if you take a short position, become the target of Wall Street bets. And if they don't agree with you, then they could drive the price of that stock, and that could really hurt you. And look, we've talked about this before. Shorting has a place in the market.
Absolutely, buyers, sellers, and we like to talk to them because they often, see problems with companies ahead of everyone else. Anyway, check this story out at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. A formal warning will come from the White House tomorrow, aimed at Hong Kong, warning investors who are shrugging off the risks in Hong Kong. The so-called business advisory will flag China's grip over the city. Major banks, of course, have been ramping up hiring in Hong Kong despite the risks. Again, the Biden administration expecting to issue that warning tomorrow. Stay with Bloomberg for the very latest. Stocks are declining. Treasury yields turning lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. Communication services, energy, and tech shares weighing on the S&P 500. S&P down now by 25, a drop of 0.6%. The Dow down 28, a drop of 0.1%. Nasdaq down 151, lower by 1%. 10 years up 16.30 seconds. 10-year yield right now 1.29%. We've got gold up 0.1%, 18.29 the ounce. West Texas Intermediate crude down 2.1%, 71.67 a barrel. After the bell, we will be hearing from Alcoa. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, we've got a great story ahead of the upcoming week, and it is Friday's Eve, everyone. It's about China's favorite fiery liquor. It is getting a millennial makeover, and I got to just tell you the backstories that we've been having around our table here in the studio.
Yeah, we should have been broadcasting during the break.
I'm kind of glad they didn't bring samples.
So joining us now is Joel Weber, editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio, as is Jim Ellis, assistant managing editor at Bloomberg Business Week. Joel, what you've had this liqueur, Baijiu.
Yeah.
And how is it? What does it taste like?
Well, I can rewind the clock a little bit.
Okay,
And I was
take us there.
I was in Beijing for the New Economy Forum a couple years ago in the before times. And we have a great colleague there, John Liu, who, one interesting thing about going to China is that, it's actually kind of difficult to interact and do commerce because, I'm a gringo, my cash doesn't work there, I don't have the apps that they use, so you're sort of locked out. The great joy of that is that your colleagues basically have to take you everywhere and feed you. So we had this great dinner, and John was like, you got a little bit more wind in you? And I was like, yeah, I got a little bit. And he was like, I'm going to get something for you. And he gave us some baijiu. And I really don't remember what happened from then on out. We're just talking a little bit. It is memorable. It is spicy, hot, fiery. And it has stuck with me, and I never want to have it again. And that was what caught my attention on this story.
Look at Jim Ellis is laughing like crazy over here.
Baijiu is it is a national liqueur, right? And it is interesting around the world. I mean, I guess in America we have Budweiser, but other people have like real things. Like in Hungary, you have Unicum. In Greece, you have Uzu. Like in China, you have Baijiu, right?
Yeah, Baijiu. I mean, it's one of those things that it's always been used for celebrations, and I mean, a lot of Americans, the first exposure they had to it was when Nixon and Zhou Enlai toasted each other with Baijiu when they opened up China to the West. And you sort of think, well, what is that? Well, it's the most popular liquor in China. It is a huge business. It's much bigger than beer. It's a $147 billion a year business. It is massive. It is something that everyone likes there and has used for celebrations for centuries. The problem is that it's very strong. It's 110 proof. And for a lot of younger drinkers, they think it's way too strong. Younger drinkers in China are becoming much more like consumers elsewhere. They like things like, they're experimenting with wine, they're experimenting with cocktails, and the notion of sitting down and basically drinking firewater, which is popular with businessmen who are older, is something that is not working out for them.
Millennial, what do you think?
No, thanks. I mean, I'm the one who's like talking about non-alcoholic beer. I'm like scared. Even my stomach is fiery thinking about this. So what are they trying to do to actually attract millennials?
So there's one company in particular that our story focuses on, which I'm going to attempt to say it. Jim, I think you can say it better than me. Jingzhaobai.
Right. It's excuse me. It's Chongqing Jingzhaobai, which is a they're basically trying to make baijiu something that younger drinkers would like. And what that means is sort of using marketing that aims at the young, going online, looking for ways to, you can suggest, sayings that they'll print on the bottles. They also sell it on Tmall, which is the massive, sort of e-commerce site there. They push it to, in things like anime. They've done ways to appeal to a younger person who typically wouldn't want this. They've also, tried to find ways to use it as, in flavors. I mean, you don't normally think of this kind of thing mixing as a cocktail, but for younger drinkers, and particularly female drinkers, they want something that has a little bit more of a fruity taste and something that doesn't really knock you out.
Is it working?
It is working. I mean, this is actually growing very fast, and because of that, it's attracted other people who want to get into the sort of lighter, lighter liquor business there. There are, it's not just baijius that have flavors. There are also plum wines are becoming a big growth business over there. That's not a big business outside of certain markets in Asia, but it's really working over there. This is the future. And, liquor, especially in a market that large, even having just a sliver of this business, means that you're going to, basically have a really, really big business.
And part of the strategy here, as the CEO told us, was they want to be a little bit like the Uniqlo of Baijiu. So, you walk into a Uniqlo shop, again, in the before times, and it's like walking into a Skittles bag, right? It's just like colors everywhere, tons of things for everyone, and yet it's all affordable. It's all very utilitarian, right? So if Jim, I was curious, like, what's the rest of this? What are they fighting against, right? Like, what are they up against?
Well, they're up against first of all, the younger consumers are much more experimental, and they are looking for other types of tipples. I mean, one thing is that, wine is something that's not really a long-term thing in Chinese culture, but they really are growing, and that's pushing a lot of the sort of Western winemakers to say they want to come in, like LVMH, to come in and develop wines just for China. That's a new group that wants to, sort of get there. They also are up against, sort of from a marketing standpoint, you drink baijiu because often it's because of a business connection, this business meeting, like Joel's dinner. But
how do you do that? Because if the business meeting is over,
well, they tend to split bottles, and that's a different approach here. There'll be a large, extremely expensive bottle. Bottles can be up.
Well, that's what I was curious. What does it cost?
Bottles can be, a bottle might be for sort of flying ferry might be $380, $390 for a bottle.
That is a lot of money.
But no, a fancy baijiu could take you up to almost $4,000.
Did they expense that, Joe?
And so,
I no comment. I can't. I literally could not interact with commerce. I was locked out. I didn't see.
But
price tags.
Jingzhou Bai has taken a different approach, which is to come up with a much less expensive version and also small bottles that you can use with just you and a friend.
I have a vague reminiscent of it being a small bottle. It was not a big bottle. So, the other thing, Jim, here is like, is there an ability for a product like this to really ever find its way out of China at this day and age, or is this just really you're just appealing to the billions of Chinese?
Just got about 25 seconds.
Well, most likely this is something that won't make it here because here in the U.S. most things are going lighter, not heavier.
What I think is just sort of interesting about this is like even something like this that you could just leave. You would think that there's no future in this, right? And it can cost like upwards of $1,000, and yet you wrap a little bit of a story around it. You put some marketing dollars behind it, reimagine it, and like maybe you got a shot.
We're already getting some sent here for you, Joel.
Oh well, we know how that ends.
Next time we go to the bar, we'll check it out. Joel Weber and Jim Ellis of Bloomberg Business Week. Thank you so much. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Thursday, July 15th. It is a down day for the S&P and NASDAQ. The Dow swinging between gains and losses, back in the green, little changed, up by 6 now. A gain there of less than 0.1%. 10-year yield falling back to 1.29%. Stocks decline. Treasury yields turn lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. Communication services, energy, and tech shares weighing on the benchmark S&P 500, which is down now by 18, a drop of 0.4%. NASDAQ is down 118, down 0.8. The NASDAQ 100 index lower by 0.8%. Again, that 10-year worth repeating 1.29%. The Dow now higher by 16, up less than 0.1%. Federal Reserve Bank of St. Louis President Jim Bullard says the central bank has met its goal of achieving, quote, substantial further progress on both inflation and employment, urging policymakers to move forward in reducing stimulus. And on Bloomberg Television and Radio this morning, he also discussed the inflation outlook.
We're, already above our target on core PC inflation. The committee, according to the Summary of Economic Projections, is projecting 3%. That's excluding food and energy prices. That's more inflation than we've seen in a long time in the U.S. And I think some of that will hang on and persist through 2022.
After earnings, we've got Morgan Stanley shares down by 0.1%. Morgan Stanley bankers cashing in on last quarter's hectic period for deal making. Netflix expanding into video games. Netflix shares lower now by 0.8%. Recapping stocks lower, S&P down 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So we have a flurry of virus and vaccine headlines. Health officials in southwestern Missouri asked the state to set up an emergency hospital to handle a surge in Delta variant cases. Tim, that threatened to really overwhelm health services there.
Yeah, and we're also keeping an eye, of course, on the Delta variant and listening to what executives have to say during their earnings calls about how they're monitoring it, not just for their business, but as they also at the same time try to get employees back to the office.
Africa, by the way, has seen 1 million new cases over the past month. Hospitals are at a breaking point with the continent in the grip of its most severe wave of infections there. So lots to get to. Let's bring in Tolbert Nishwa. He is Senior Research Associate at Johns Hopkins University, Bloomberg School of Public Health, former Deputy Minister of Health for the Republic of Liberia. He joins us on the phone from Delaware at the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Tolbert, nice to have you here with Tim and myself. Every day, Tim and I have to go through and look through the headlines to try and really put out there to our audience what really matters, what they need to know about. What do you think, first and foremost, do we have to kind of understand about where we are when it comes to the health pandemic?
Carol, Tim, thank you for having me. Thank you, both of you, for having me. It's a privilege to be on. We in a situation where risk communication and community engagement cannot be overemphasized. The fact of the matter is people are the vaccine uptake is suboptimal, and we see a strong correlation between unvaccinated and COVID-19 cases, hotspot, hospitalization, severe disease, and unfortunately deaths. And these are preventable once you take your shots. So people need to make use of the vaccines. In fact, we gave you specific examples of COVID-19 hotspots right now. You see states like Missouri, South Carolina, Oklahoma, Utah, Nevada, Arkansas, Mississippi. These states, the vaccination rate is still below 40%.
How do you get it above? If people aren't going to get a vaccine now, who have access to vaccines for free, who have access to vaccines that are really convenient, are they ever going to get a vaccine? Is it time to just move on and send these vaccines out of the United States to countries that need them more?
It is important to solve the inequity gap that we have in other countries, like in the global south, in Africa and other areas around the world and what's happening in Asia. But it's also good for the United States that have assets and availability to make use of the vaccines. That's the most important part. Politicizing public health, especially the current COVID-19 vaccination program, place people in harm's way. With the data variants, we see that 99% of the infection and deaths are in people unvaccinated. So people should not move on. We need to get to 0 cases of this virus or create the herd immunity. 70% of the population get vaccinated and make sure that we do this. Is a patriotic duty. Every citizen to take their vaccines.
Hey, Tolbert, let me ask you something, because we just had on the Carnival Corporation CEO, Arnold Donald, and they are starting to set sail here in the U.S., out of U.S. ports specifically, but it is a slow progress, and they've been waiting for a long time. And I asked Arnold about the Delta variant, specifically the impact it has, and he did talk about that they've dealt with other viruses. They've talked with dealt with Zika, they've dealt with SARS. Is there something different, though, about COVID versus some of those other viruses?
The other viruses you just talked about were at the level of a pandemic, and what makes this difficult is that the entire world is dealing with this pandemic and this virus, and the fact that we still don't have treatment for this, and the vaccines are in low supply, the supply chain is limited for the rest of the world. It gives the virus the opportunity to mutate, and this is why we've seen the variants that's occurring right now. We've seen 4 kinds of variants, and the Delta variant is becoming more transmissible, as we see it. Studies in the UK and other areas have shown 60% transmission, and even more virulent as compared to the rest of the 3 alpha, maker, and gamma variants that we've seen. This is the important part. We dealt with Ebola. Ebola was I was the incident manager in West Africa when we dealt with Ebola. It was contained and localized in 3 West African countries. Zika did not go as widespread as we see as a pandemic right now. And so this is the difference with COVID-19. But the good news is we now have the vaccine. So people should go and take their vaccines. That's very, very critical.
Tolbert, you were Deputy Minister of Health for the Republic of Liberia. Carol mentioned the statistics about Africa, very concerning. It is not a monolith. Each country is different. But I do wonder, what's a realistic way for us to think about the pandemic ending on the continent, given the tough access to vaccines that many countries have? Does it just continue to go unabated?
It is right now as we see it, and no country is safe. Another part of the world is not making the same progress that countries in the global north, the United States and Europe, are making right now. The trend in Africa is worsening, and the reasons are simple. Number one, our healthcare systems are weak in those countries. We see spike in the number of cases. Our concern right now is scientific and global health community, public health communities, to not get Africa to where India is and Nepal and other countries are right now. And we see the trend in Africa to be, worsening and alarming, with just less than 2% of the people having vaccines, and vaccines are not available there. Health system weakness, people are downplaying the virus because they're not seeing the number of deaths in other places.
Tolbert, thank you so much. We really always appreciate when you give us some time. Tolbert Nishwa, Senior Research Associate at the Johns Hopkins Bloomberg School of Public Health, on the phone from Delaware.
Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nancy.
Hey, Tim, the first monthly checks and direct deposits went out today with the child tax credit of up to $300 per child for the families of 60 million children.
The president said he's been hearing from grateful parents how they plan to spend the money to improve the lives of their kids.
I believe this is actually a historic day. This is a middle-class tax cut. It's one of the largest ever single tax cuts for families with children. The largest ever one-year decrease in child poverty in the history of the United States of America.
The direct payments to families are a temporary measure that was part of the pandemic spending bill. The president is now trying to persuade Congress to make it permanent as part of his follow-up package. In Washington, Irv Chapman, Bloomberg Radio.
This afternoon, President Biden and German Chancellor Angela Merkel will take questions following their bilateral meeting at the White House. You can listen here on Bloomberg Radio around 4:15 Wall Street time. Senate Majority Leader Chuck Schumer is pressuring lawmakers to reach agreement by next week on a pair of massive domestic spending measures.
I've talked to some of our Democratic members of the bipartisan group. They're making very good progress. There is no reason why we can't start voting next Wednesday.
Schumer says it is time to make progress. Senators from both parties have been struggling to reach a final agreement on a $1 trillion package of highway, water systems, and other public works projects. And Democratic senators are working to reach agreement among themselves on a budget blueprint that envisions $3.5 trillion in spending for climate change, education, and expansion of Medicare, and more. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thanks so much. This is Bloomberg Business Week in our Interactive Brokers studio. Carol Massar, Tim Stanovic. Earlier today, Bloomberg Quick Take chief correspondent, my former co-host here, Jason Kelly, caught up with Apollo CEO Mark Rowan from the Bloomberg Invest event. A lot to talk about. And in this excerpt, Rowan talks about the dramatic changes happening at the firm. You might recall there's been a lot going on at Apollo.
We are in the process of a generational shift. So we've now done the entirety of generational shift at Apollo. And that means governance, that means one share, one vote, and that also means Leon stepping down from the firm at the beginning of the year and Josh stepping back upon the closing of the Athene deal.
All right, and that was, of course, the new CEO of Apollo, Mark Rowan, talking there with Bloomberg Quick Take chief correspondent Jason Kelly. Check more from this interview. You can find that on the Bloomberg terminal, also at Bloomberg.com.
Yeah, remember in the last year, the New York-based firm saw record profits. It hired 300 people remotely and had fewer employees leave the firm. That's according to more that Rowan told Jason Kelly in that interview for Bloomberg Live's Invest Talk series.
Listen, Jason does a story. It's on the terminal. You can check it out. You know it if you are a loyal Bloomberg reader and watcher and listener here among our various platforms. I mean, there's been incredible palace intrigue, as Jason writes, at the private equity powerhouse that's really captured the attention of Wall Street. And this is, of course, the firm founded by Leon Black, who was forced to step down over his long-time association with the late Jeffrey Epstein. Josh Harris is in the process of leaving and starting his second act after a failed bid to replace Black as CEO. There has been a lot of, as he said, those backstories that have really captured our attention.
But here's what Rowan said about that. He said, quote, "The noise sometimes just exceeds the reality of what's happening, so imagine how well we do without the noise."
Whoa, drop the mic.
Yeah, I mean...
It's a powerhouse. Private equity, love to watch. They raise a lot of money, have a lot of money to commit to a lot of endeavors and really track some of the big trends that are out there.
Yeah, he sees a long runway, 5 years. Rowan expects Apollo's yield and hybrid business will double in size, and the opportunistic business will be 50% bigger.
This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks now trading mixed. Tough day for tech. We've got the S&P, NASDAQ both lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading choppy today, with the Dow currently up 15 points. S&Ps are down 20, and NASDAQ lowers by 136. The U.S. 10-year yield falls to 1.29%. Gold is little change. Bitcoin is down 4%. And transports gain 19 points. Among the main 11 S&P sectors, leaders were consumer staples and the utilities. Energy and tech led to the downside. And leaders to the upside in the Dow, Honeywell and UNH, while Salesforce and Walgreens were under pressure. After earnings, Morgan Stanley was a little changed. And in other news, Democrats high penalties for utilities that miss climate targets. And PayPal increased their purchase limits for crypto. Wrapping things up, Alcoa reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at sort of $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
It is time for the Bloomberg Big Take. It's the Bloomberg exclusive that needs to be on your radar. It's only our story. And Tim, we know about the gold rush from years ago. We know about the tech craze back in 2000, the Reddit-fueled mania. That's the time we're living in as well. How about the ETF rush?
It is massive. Wall Street surrendering to the $500 billion ETF rush. Joining us now is Claire Ballantine, markets and ETFs reporter for Bloomberg News. She joins us on the phone from New York City. She's got today's Big Take, the story that needs to be on your radar. Claire, what is going on with ETFs? Where's the money going? And who ends up winning here? Contextualize it for us.
Yeah, so it's part of a trend that's been going on for the past decade or so. After the 2008 financial crisis, we really saw a lot more money go into ETFs. Investors really like their transparency. They're easier to trade, and they're often cheaper. That's only picked up in recent years, and especially since the pandemic. Part of it is just how well markets have done. Everyone wants exposure, especially to equities. So we've seen billions just flood in this year to those products. The other aspect of things is that people are preferring these over mutual funds because of those reasons. They're easier to access. So it's sort of just a continuation of that trend.
Okay, so you and Francesca have some data in your story. ETFs are on the brink of luring more money in 7 months than in any calendar year on record. At $488.5 billion and counting, they're going to likely break the $497 billion full-year record that was set in 2020. And at this pace, they're going to do it in weeks, possibly in days. What's going on with mutual funds?
So mutual funds, in general, have been losing out comparatively to ETFs. Last year, in 2020, ETFs added about $500 billion of new cash, whereas mutual funds lost about $500 billion. Pretty drastic figure there. In terms of mutual funds this year, seeing big exits from mutual funds focused on equities. Still, mutual funds that contain bonds that are fixed income focused are seeing inflows. So that's led to about a net $89 billion into mutual funds so far this year. But as you can see, ETFs just really outpacing them, and the trend is towards those products.
Claire, your story is near and dear to me. My first show that I produced at Financial News Network years ago was called The Mutual Advantage, and it was all about the mutual fund industry and which mutual funds you should be investing in. I mean, it's not so long ago, to be quite honest. What is it, though, that we need to understand about the shift from mutual funds to ETFs. What is so different beyond that? You know, we know ETFs, right? They trade every day, and so we get information every day. But is there something more significant in terms of what it means for the financial markets? I mean, are we all more so buying the broader market than ever before?
One thing that I really stress to people when I talk about what an ETF is that ETFs and mutual funds, they have a lot of similarities. I mean, when you think about these, it's a wrapper. It's a wrapper for, you know, a basket of equities or fixed income. It's just sort of the package that you're getting these in. But there are a lot of key differences. So ETFs, they're more tax efficient due to their structure. They're transparent most often. They trade on exchanges. So it's sort of more of a technological shift almost. I mean, they're similar in a lot of ways in terms of their objectives. ETFs, according to a lot of investors and analysts, are just better at that.
I'm wondering specifically about the mutual funds that you mentioned in here that have started to actually change to and convert to an ETF. So we saw that back in March. It was the first time that happened. And this was by the pioneering quant giant Dimensional Fund Advisors. Take us through what happened here and if you think we're going to start to see more mutual funds convert into ETFs.
Yeah, so the first official one was by a really tiny firm called Guinness Atkinson, which I think is such a cool story because they are this tiny firm that did it first. And I talked with them a lot, and they said that it was an extremely difficult process. I mean, as you can imagine, lots of legal legwork. I mean, this is not something that can just be switched over overnight. But then after we saw that first tiny firm, we then saw Dimensional shift a ton of their assets in their mutual funds into ETFs. That really was a big moment. You know, they are such a large firm. They have $637 billion under management. That really got on people's radar that this is a possibility. It's not easy. It can't work for every mutual fund, but there is sort of this pathway being built now where mutual funds can convert to ETFs.
It's interesting to see where it's all going. I mean, they do trade differently. Like they trade on exchanges. You can trade ETFs though throughout the day. And I guess that was the distinction I was trying to make earlier.
And big tax differences too.
Exactly, because they price at the end of the day, right? And there was tax implications because of it. I do wonder, do we move to a world where mutual funds no more and it's just ETFs? Why not?
Are you late to the game?
Are you late to game if you're not there already?
Right. A lot of questions.
A lot of questions. Anyway, it is our big takeaway here at Bloomberg. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Guess what's coming up?
Oh, it's the song of the day, the chart of the day, and also the stock of the day. I didn't need to guess.
Equals.
Dave Wilson.
Yeah.
Oh, okay. He's right here with us. He's here in the studio.
He is indeed. We're going to get all of that from him in just a moment. First up, though, back to the trading day. A check with Charlie Pellet.
All right, thank you very much. 20 minutes to go ahead of the closing bell. Morgan Stanley reported earnings this morning. Shares higher, little change now, up by less than 0.1%. Alcoa weighs in after the closing bell. AA on the ticker, down now by 1.5%. Stocks declined. We're off session lows, though. Treasury yields turn lower again as Federal Reserve Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. Communication services, energy, tech shares weighing on the S&P. Growth favorites that led the recent rallies, such as Amazon and Google parent Alphabet, dropped from recent records, sending the NASDAQ 100 index lower. NASDAQ 100 down now by 0.7%. NASDAQ Composite Index down 104, also down 0.7%. The S&P down 14, down 0.3. Dow Industrials up 45, higher by about 0.1%. 10-year up 15.30 seconds. 10-year yield 1.29% right now. We've got gold up 0.1%, up 2.30 the ounce to 18.29, and a retreat again for crude West Texas Intermediate now with a 71 handle, down 2.2%, 71.54 a barrel. New COVID cases in Tokyo have reached the highest in 6 months, about a week before the Olympics are scheduled to start. Health professionals in the U.S., meanwhile, keeping an eye on rising COVID cases amid ongoing concerns about people who haven't or won't get their vaccines. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Anytime we see trends headed in the wrong direction, that makes me nervous, regardless of what the numbers are, because it, foreshadows what could come, and we need to act early because we don't want to have setbacks. We don't want to, go back to where we were. Now, I don't think we will. I think, fortunately, vaccines rolled out in, decent quantities will prevent us from going back to what it was like last winter, but we shouldn't be even headed towards multiple week increases when we have tools on hand to prevent that from happening.
Jennifer Nuzzo of Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A mixed day for a lot of the vaccine stocks that we track. Pfizer, for example, up 0.3%. Its German partner, BioNTech, the ADRs there up 4.2%. AstraZeneca's ADRs down 4.5%. Moderna surging by 5.3%. Johnson & Johnson lower by 1.2%. One more COVID note. New York City's Marriage Bureau will reopen on Monday, 16 months after the city closed the department at the start of the pandemic. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Is this in the 90s, from the 90s?
No.
Okay.
Quite not.
Older or younger?
Older.
Well, I'm glad you were.
Let's put it this way. When I asked our producer, Paul Brennan, about it, he knew the song.
Well, he's a pretty young guy.
Yeah, but, he has certain musical tastes.
He does have certain tastes. I hear he listens to a lot of Celine Dion on the weekends. All right.
Well, that's not Celine Dion.
No, it's not.
Anything?
Well, I'm thinking of where he's from. He's from Boston, loves his hometown.
Okay, you're on to something.
So I'm trying to think. Oh, is it Aerosmith?
It is Aerosmith.
Nice job.
There you go.
Wow.
And it's a
I did
song,
get an assist from my producer.
Oh, absolutely. Well, come on.
But he didn't say the name.
That was Steven Tyler?
That was Steven Tyler. Sort of a... it starts out ballady and
Liv
it gets
Tyler's
all rock
dad.
and roll.
Yeah, no, I know who Steven Tyler is.
All that
I
good
like
stuff.
Aerosmith.
I know you do.
And look, Aerosmith had some great albums in the 90s too, when, my vintage.
Yeah, I know, but we're talking 70s here.
Okay.
In any case, I thought of the song when I came up to do a headline for the chart. Seasons of Wither.
Oh,
That's the song.
nice.
Now, seasons refers to earning seasons, and withering refers to what bank stocks, the biggest banks anyway, have tended to do in the past few quarters after earnings come out, specifically referring to their shares. And that's what the chart tracks. It goes back 7 quarters, looks at Bank of America, Citigroup, JP Morgan Chase, and Wells Fargo. As of yesterday, all 4 of those banks had reported. So it just looked at one-day stock performance. And, given the track record, if you're a shareholder, it's probably just as well that the numbers are out because, you look at how they've done. Bank of America down 7 quarters in a row after earnings. Citigroup off 6 quarters in a row. JP Morgan Chase down 4 quarters in a row. Now, Wells Fargo's been up the last 2 quarters. But then again, they took hits for 5 straight quarters before that. So it's not like their shareholders have escaped the effective results either. I guess it's really just a matter of perhaps some disappointment with what the banks reported. You can always find something, it seems, in the results that doesn't look so good, or just concerned about the outlook. Whatever the answer is, it's just not a great track record. So maybe,
Why is that, do you think? Is it just expectations, or they're trading higher ahead of it, and then when they finally report, it's like, wah, wah, wah?
Yeah, I mean, you'd have to kind of go back case by case and figure out why this has occurred repeatedly. I mean, that's it. These are companies that have certainly had their challenges in growing, with interest rates coming down, and last year with the pandemic and the way it kind of played out in terms of the economy. So there are any number of explanations for it all. But I will tell you this, if you want to see this lovely little bar chart with all 4 banks represented.
Very colorful.
It is colorful. And if you want to see it, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It was just on our YouTube channel, too, so folks can see it there as well.
There you go.
Yes.
Hey, Dave, give us a quick preview of the stock of the day.
Retail Value. Yeah, that's the name of the company. Ticker is RVI. It's a real estate investment trust that was spun off 3 years ago from another REIT called Site Centers. And yeah, they run shopping centers, but they also sell them. And the story today is that they agreed to sell centers in Puerto Rico for $550 million in cash to a company called Kildare Acquisitions US.
Muy bien.
Yeah, well, there you go. They have to pay off mortgage debt associated with it, but it's only $214.5 million, so there's a lot left over. People like the idea, like what they saw. Retail value up more than 10.5%. And that brought the stock to its highest price since March of last year.
So it's a REIT they actually own properties, or they help others get rid of it?
They own properties, but these are like properties that Site Centers, which was DDR back in the day, didn't really want to keep. So a lot of their business is selling as well as operating.
Up 64% this year.
Yeah, good year. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time. It's on Facebook, LinkedIn, and on Twitter @TheOneDave.
It was a colorful chart. Loved it. Dave Wilson, have a good night. Let's get to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says monthly payments under the expanded child tax credit are going out today.
It's historic, and it's our effort to make another giant step toward ending child poverty in America.
Biden wants the benefit, though, to be permanent. Parents eligible for the credit will get $300 a month per child under the age of 6, $250 a month for each child that is between 6 and 17. Well, the president has his focus on international affairs this afternoon as he meets with German Chancellor Angela Merkel. The two are expected to discuss the pandemic and other weighty issues, including the Nord Stream pipeline. They'll hold a joint news conference in the next hour. You can listen right here on Bloomberg Radio. The U.S. Surgeon General has issued the first health advisory of the Biden administration. Dr. Vivek Murthy is calling for a war against COVID misinformation with the Delta variant on the rise.
Surgeon General advisories are reserved for urgent public health threats. And while those threats have often been related to what we eat, drink, and smoke, today we live in a world where misinformation poses an imminent and insidious threat to our nation's health.
Murthy says the misinformation is prolonging the pandemic and putting people's lives at risk. Jeff Bezos is making news today for picking an 18-year-old student to fly with the Amazon founder and 2 others next week on Blue Origin's first space mission. Oliver Damon, who graduated from high school last year, will be the youngest person to travel in space. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. No relationship to Matt Damon, though. Different spelling.
Would you send your 18-year-old to space?
If she really wanted to, I think I would.
You would?
Yeah, maybe I'm crazy. I mean, if this is something she really wanted to do, I have to believe that they have gone through a bunch of launches safe. I mean, this Jeff Bezos is going on this. My guess is if there's ever going to be a safe trip.
Yeah, it's when Jeff Bezos and his
Have
brother.
you checked the systems? Have you checked the systems? Have you checked the systems like a million times?
Yeah. Well, you heard Nancy talk about it. It's what we're talking about right now. Bezos' Blue Origin is going to fly an 18-year-old, the youngest in space. He's the 18-year-old son of a Dutch financier. He's going to fly to space with 3 other people. This on the company Blue Origin's first crewed mission after the winner of that auction, that $28 million seat, opted for a later flight.
Scheduling conflict. I love that. I'm really
At the
sorry,
last
but
minute.
like what came up that you cannot fly to the moon?
I don't know.
Can I just ask you?
Well, it's not the moon.
I mean, not the moon.
Yeah.
All right, I'm sorry. All right.
Sorry.
Edge of space, a little bit
sorry.
further into the edge of space.
Sorry.
All right, space boy.
I'm here to space-splain you.
No space shaming here. Well, having said that, it is interesting, and you are going to be on the ground in Texas when that launch happens.
I will. I'm going there Sunday. I'll be there Monday, Tuesday, and Wednesday. I'll be doing live coverage along with many of our Bloomberg colleagues who will be there for our simulcast.
I hear there's like a whole country going from Bloomberg.
Yeah, it's going to be exciting. We already have dinner reservations. We're going to have fun.
You get space burgers?
It's a big deal, though.
Tang?
It's a really big deal. I mean, Blue Origin has done 15 of these flights before, but none of them have ever had a human being inside them.
No, so that is a big change.
It's a huge change.
We saw it with the progression of the space, back in the 1960s, how they, built up it incrementally in terms of who was on board. What is it that you're going to be looking out for? What are you most excited about?
Look, I'm most excited about the actual launch. I've never been at a rocket launch. We're going to be pretty far away from it, as will many other people. You can't get close. This is so much different. You have to be. This is so much different than what we saw with Virgin Galactic over the weekend. This is an actual rocket launching from the ground. So we're going to be there. We're going to be in the desert. It's right on the border of Mexico and West Texas. It's going to be exciting.
Tuesday morning?
Tuesday morning, 9 a.m. Eastern time. That's when the launch is set.
Look forward. Safe travels for you,
Thank
kiddo.
you.
All right, you're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow higher by 22, up by about 0.1%. S&P, NASDAQ, both on the minus side now. S&P down 18, down 0.4%. NASDAQ down 121, down 0.8%. NASDAQ 100 index down 0.8%. Russell 2000 down 0.7%. 10-year up 15.30 seconds, 10-year yield 1.29%. The Dow higher, up 18, now up by about 0.1%. Stocks decline, Treasury yields turn lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. First day out for Membership Collective Group. That's the company behind the trendy Soho House members clubs. Right now, stock is trading lower. MCG on the ticker down by 8.6% in its trading debut after raising $420 million in an IPO priced at the bottom of a marketed range. Earnings after the bell include Alcoa. Alcoa down now by 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So Tim and I have been watching the trade today. We've been bouncing around, certainly on the equity front. We're off our lows, off our highs of the day as well. Talking about, though, the importance, it feels like, when it comes to the bond market specifically, watching that 10-year note, that yield below 1.3. So let's see what it all means. Let's get to it with Anna Hahn. She's Vice President and Equity Strategist at Wells Fargo Securities, with us on the phone in New York City. Anna, good to have you here with Tim and myself. You do watch the equity markets, but, you watch the financial markets. Do you feel like the equity markets or the bond market tells the true story of what's going on and what we can expect in terms of the economic and market environment for those publicly held companies?
Hi, Carol. I think you got to look at it together, right? Because both parts, equity and the fixed income markets, are giving you a little bit of a mixed signal when you look at it on their own. But when you blend them together, the picture starts coming together. So we can start with the fixed income markets. You see that yields are dropping, the 10-year below 130. It's got people jittery, worried about future economic growth here. But you see the pullback there is mostly coming out of real yields. It's not coming out of the inflation expectation portion. So it looks like, okay, it's not necessarily future growth that's really taking it. And then you look over towards the equity side, what's leading today? Utes, staples, but also financials, right? So it's this mixed bag where you have part of the market concerned that, accommodation is not enough. It's got to stay on because, inflation is too transitory. But you have the other part of the market thinking, hey, growth will continue. So it's a mixed bag today.
So let me go back to the message that the bond market is sending, at least as far as you're interpreting it. What is it exactly saying to you with yields dropping like this?
When yields drop like this, generally we think about, the belly of the curve or the longer end of the curve as a reflection of the growth of the economy or expected inflation, right? But in that aspect, you have to realize that nominal yields moving has two components to it. You have the actual real yields portion, and then you have the part where then you can back out how much of it means actually the inflation expectation, the future growth part. And a lot of the move, especially since the end of March, has come from that real yields portion. I think that part by the end of the year is going to have an inflection point and trend back upwards. Right now, real yields are in negative territory. I think that the 10-year is probably around negative 90 basis points, if not more, in real yield. I think they'll trim up to probably negative 50 by the end of this year.
Still negative,
we'll see
though.
Yields eventually. Yep, still negative. It makes it tough for the financial sector as well when you see yields low like that.
Which is why you say it is fascinating to look at the major industry groups in the S&P 500. There are 11, utilities and consumer staples, as you say, which would be kind of a more safer play, right? Careful play. And then financials and real estate, which would speak to recovery, right? It is a mixed mixed bag.
Yep, and something special, too, that I want to highlight here is that youths, staples, and REITs, they're very traditionally what we like to classify as low volatility sectors. Like you said, Carol, defensive. But not just defensive because, economically you think about their sensitivity, but also because as yields retreat in a growth contracting environment, these kind of groups tend to hold up better. They tend to outperform the market. And low vol is a tactical positioning that we recently recommended for those who, need to lighten up on that sting from yields retreating.
Hey, Anna, we just spoke earlier in the show to Arnold Donald, the president and CEO of Carnival Cruise Corporation. He told us that demand is robust, pricing is strong, and in fact that bookings in 2022, pricing is also stronger than all the way back in 2019. I'm wondering about mid-cycle recovery plays because I know you got your eyes on leisure and travel, people looking for experiences over things. What do you got your eye on?
Similar, like you said, the cruise industry is a great example, but anything tied to that where people can travel, again, hotels, leisure, when you're going out somewhere, and really when you say experiences, it's, kind of a cheesy phrase, but it's true. Think about those parts where lodging, airfares, car rental, these kind of things are what people want to do because we haven't been able to. So that's that mid-cycle exposure we like, and we still think it's too early to shift. It's not into the late cycle plays. I think that the economic recovery where it is today, we're still going to see some robust growth for a couple quarters, especially on the earnings front.
Might we stay in this mid-cycle world for a while?
It's very possible because if you think about one thing that's kind of dampened earnings growth a little bit, at least we're seeing evidence of that in this earnings season, is the supply constraints and that labor shortage. You've heard it time and again. But what's also kind of not offsetting it necessarily, but also helping to extend the economic cycle is that corporates themselves are doing more supply management. And that supply management, because they know that they have low inventories, they're not rushing necessarily to restock these inventories, but they're managing their supply chain so that they can extend their corporate growth out. I think that's helping as well, and they're going to keep us still in that mid-cycle for a little longer.
What are you seeing with earnings right now? I'm just thinking about mid-cycle, right?
He paused. He's like, wait a minute.
Well, here, it's interesting because here we are. The big banks have all reported.
Yeah.
Right. So
just the beginning of earnings.
It is just the beginning of earnings season, but this is like what marks the beginning of earnings season. It gives us so much insight, Anna, into what these companies are thinking about the economy, and we have gotten a handful of companies as well, including airlines and Pepsi. Outside of the big banks, but how would you characterize the results that we've heard thus far? Because investor expectations are really high here. I'm talking to the tune of over 60% earnings growth.
Yep, you hit something very key here is that investor expectations. Because right now you're seeing that a lot of the corporates over the last 2 quarters were beating EPS estimates, but those EPS estimates were sell side. Now, the way that this earnings season has started, same thing. You're getting a good amount of EPS beats out there, but the reaction to these beats hasn't been so hot. You're not seeing this great one-day reward after announcement. It's because investor expectations are elevated. But something to keep in mind is that what also people look at here is what are corporates saying in those transcripts. And what we've highlighted is there's a lot of focus on margin pressure and input costs. For those corporates who are saying that they're able to pass along those elevated input costs and able to maintain those margins because right now demand remains so robust and they can manage those supply chains, that's a pretty good sign. But we also have corporates that are talking about, hey, these margin pressures are coming at us. They might eat into us in the next couple quarters. And I think for those companies in particular, investors might be getting a little more uncertain on.
But it is tricky. I think Tim and I, in talking with various CEOs and leaders and industry watchers, it's not the same when it comes to wage constraints or labor constraints. We found that with Arnold Donald. They tap into a global workforce, and he seems to be pretty comfortable
145 countries, and it's fine hiring.
It's massive, and he didn't seem to have any problems. So I just do wonder, how do you figure out, is there a narrative here, really, a true narrative when it comes to higher wages and the impact it might have?
Carol, that's our job every day. As a macro strategist, you got to go from the top down, but pay attention to those little details and put together what is the big theme. And so far, I think it helps also when you kind of focus a little more by industry. When you look at kind of more the industrial sectors, so far they're saying, hey, we can maintain margin, we can pass along price. But some other parts of the market, you're seeing that these labor constraints are really eating into those margins, and they're not so sure how that's going to keep up. But that's the name of the game for mid-cycle economic recovery. It's not this easy dumpster diving that we saw early cycle.
That's right, where you just can kind of go anywhere.
Dumpster dive.
No, it's right. It makes so much sense. Anna, thanks so much. Really great conversation. Anna Hahn, Vice President and Equity Strategist over at Wells Fargo Securities, joining us on the phone in New York City. All right, everybody, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell with our global simulcast team, Carol Massar, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the crucial moments of the day. And today, Carol, everyone seems to be talking about anxiety.
Yeah, there is a lot of anxiety. Well, it doesn't help when you've got Jay Powell up on Capitol Hill once again, reminding us, listen, we're going to be slow. We're going to, the economy still has to recover. And then you've got Jim Bullard over at the St. Louis Fed saying, wait a minute, it's time for the Fed, Tim, to start unwinding.
Yeah, a little bit.
Whoa. I'm sorry. I got to stop. Is Tim Stenovic wearing a tie?
I did it for you.
This?
It's a Thursday. It's a Thursday. He wears ties on a Thursday.
I was wondering.
The market must be really.
He had to go to traffic court this morning. I think that's what I heard.
No, I did it for you guys. But look, it has been a choppy day of trading. There's certainly some anxiety. If we take a look at how stocks are just mixed inside the major equity averages that we see, 16 moving higher in the Dow, 14 moving lower, kind of split half and half in the S&P 500, 242 versus 263. But hey, we are still at the beginning of earnings season. We've heard from the big banks, we've heard from a handful of companies, but the fun is just beginning. It seems like investors really want to know, hey, we're taking a step back and we're going to look at how these companies are reporting and how they're thinking about Q3 and the second half.
The big fun coming in big tech. IBM Monday, you get Netflix come Tuesday, you get volumes up ahead. No place to hide, even in big tech today, Taylor. We see the NASDAQ down, but still volumes up a little bit.
How much of that is to, further falling yields that we continue to get, having a great conversation with Jonathan Gall about the bond markets, at least in the long term, saying that they agree with the Fed.
All right, closing bells. Thank you, Taylor. Here are the closing bells here in New York.
Baton.
Look, I take the baton, as Caroline would say. The S&P 500 looks like it's going to end the day down by about 14 points. That's down about 0.3%. The NASDAQ Composite down about 0.7%. You are seeing green on the screen for those of you watching us on a screen. The Dow Jones Industrial Average, that's your green, up about 55 points here, up about 0.1 to 0.2% roughly here on the day. As for the Russell 2000, that did come well off of the lows of a day. It was down as much as 2% here on the day, but now only going to finish the day down about 0.5%.
And I got to say, guys, I do wonder about, U.S. investors watching what's going over in China in terms of economic growth. Second quarter growth slowing largely as expected, but China continues to give us a window of what life and financial market life is like post-pandemic, and little concerns that maybe U.S. growth will ultimately slow down here, Tim, as well.
Yeah, Taylor, I know you're watching the bond market because the bond market, and also in addition to that, just the major industry averages and seeing how the industry groups are playing out today, because you have to ask the question about the signals that it's sending, Taylor.
You look great, Taylor.
Should I just stand here and keep my mouth quiet, or should I speak? I could just stand here all day in front of a chart. Let's take a look for our bond, for our radio audience, who some of the gainers, some of the losers are. At least for the gainers, some of this was a bond story with yields falling. Utilities are some of the best performers, up about 1.2%. Banks typically don't do well when yields are falling, but I think with all the earnings behind us, we're at least happy that some of that news, the headline news, is behind us. Quickly, just for the losers, for our radio audience, sort of technology, the rotation out of energy as well, 1.5 to 2.5% on the bottom.
What did Romaine say?
Feeling bad about the bond market getting some...
I've told you, Carol, you have to learn to ignore me.
No, I never want to ignore you. Never want to...
Taylor has learned that. Caroline's learned that.
All right, we're a little slow to the party here. Let's get to Moderna. Once again, it's an outperformer here, up 5.3% in today's session, $259.67 a share. Hit $100 billion market cap yesterday, well above it today. The Bloomberg Business Week cover story talks about how Moderna is looking to take that messenger RNA technology and expand it. Jefferies raising its price target to 250 from 170, expecting a slight second quarter beat. That company will report in August. We'll have those numbers. U.S. Bancorp watching the financials, climbing after earnings surged more than 200%. Piper Sandler saying it was a revenue-driven beat, which seems like a rarity this day. So USB, we saw up 3.2%. And AIG, got to point it out, AIG agreeing to sell almost a 10%, 9.9% equity stake to be exact, in its life and retirement business, as well as affordable housing assets to Blackstone, a $7.3 billion deal in cash. And we saw AIG shares, guys, up 3.6%.
All right. You got the gainers, Carol. I got the decliners. Let's start with Carnival. You and I spoke to the company's CEO, Arnold Donald, a little earlier in the day. The company finishing the day down nearly 2.8%. He did tell us, though, that demand is robust, pricing is strong, and bookings in 2022, and pricing is stronger than it was in 2019. I should note that a handful of the cruise companies took a beating today. Biogen finishing the day down nearly 6.8%. Shares sank to their lowest point in more than a month today because two major hospital systems and a group of health insurers said that they wouldn't administer the controversial Alzheimer's disease
What's going on with J&J, Tim?
Well,
because I keep hearing all this stuff, they're pulling all this stuff from the shelves.
Yeah, that's right. Down 1.2%. It has to do with sunscreen. We learned late yesterday after the market closed that J&J is voluntarily recalling some spray aerosol sunscreens from the market amid concerns that the products could be contaminated with a cancer-causing chemical. J&J down 1.2%.
Yeah, that's a crazy story.
It is a crazy story. CVS pulled products today, too.
Meanwhile, J&J's got their earnings next week. We're going to be all over that after a series of mishaps, it would seem, for the company. Meanwhile, let's go cross-asset. I'm looking at your global macro movers. Today is a story of dollar strength, a story of yen strength. It's a story of a flight to a haven. We see, therefore, the currencies most related to commodities on the downside. I'm seeing Canadian dollar off by 0.7%, an Aussie dollar off by 0.8%, Norwegian krone also off by more than a percentage point. That as oil tugs lower as well. And that WTI crude, $71.52. We're down 2.2%. Brent crude also falling as we anticipate an OPEC plus increase in production, as we see, of course, dollar strength, that hitting the likelihood to be buying into oil at the moment. And lastly, I'm looking at, interestingly, UK gilts bouncing in the short term. On the short end, the 2-year yield up 6 basis points. We don't have just inflation here in the US. There's inflation, of course, being seen in the UK, and some of the key monetary policy committee members there saying maybe we'll have to push back on stimulus and withdraw it sooner than later.
And I cannot continue to understand what is going on in the bond markets. We've tried to get a lot of experts to explain the further falling yields that we continue to see. Carol, really across the curve here, we're down a few basis points on the day. As you can see now, almost 5 basis points below a 130, below a 193 on 10s and 30s. Yeah. And it comes on, well, we got really interesting comments, Carol, from Mohammed El-Arian this morning that CPI and PPI are showing a much different story. But the bond markets, frankly, at least for now, believing in the Federal Reserve, they have these yields capped.
Yeah, Anna Han over at Wells Fargo was a guest with Tim and myself here on Bloomberg Radio, and said that we keep getting mixed signals from the equity and the bond markets. Jim Bullard, though, I think he's very clear when it comes to signals and what's going on. He caught up with our Michael McKee earlier today. Of course, the president of the St. Louis Fed. Here's what he had to say about action that should be taken by the Fed.
I think we're in a situation where we can taper, and I think setting those parameters the right way. We don't want to jar markets or anything, but I think it is time to end these emergency measures.
So he says, that's Jim Bullard of the St. Louis Fed president there. Time to start the tapering, Romaine.
Yeah, but why isn't, I need Taylor or somebody to explain why we haven't seen the freak out with yields going back below 130 on the 10-year, with that real yield going back below -1%. I mean, before when we hit this, everyone was freaking out. And then some people say, oh, it's just technicals. Oh, it's just, what, people were short or something. And I don't understand. What's the explanation? What's the narrative I'm supposed to believe now?
Honestly, the truth is, I don't think people know. I mean, we just had Jonathan Golub, right? Killing it, Tim, from Credit Suisse. And he says, yeah, well, the bond markets just aren't freaking out because they believe that the Fed has everything under control. We showed him a chart of 2-year break-evens rising, 10s and 30s aren't going anywhere. And he goes, oh, the bond market's pretty well behaved. Well, I think experts are believing that.
Yeah, it certainly seems like that's the message that it's sending. But Carol made a great point earlier in our radio broadcast today. It was, which Fed official are we supposed to listen to about this? Because we are getting mixed signals from officials at the Federal Reserve. And it seems like at least the bond and the equity markets, they're listening to Jay Powell with his testimony. And he's saying, hey, we are going to support the economy, Caroline, for as long as it takes to come back.
Yeah, because of every Bullard, there's a Charles Evans, who we also spoke to today. who's generally saying on far more dovish kind of track. So the narrative continues. I mean, also they're also talking crypto as well, and crypto taking a beating from perhaps maybe getting some central bank action overall there. But
do you really think that's going to happen? Do you think they're going to move forward with that, Caroline?
ECB seems to be. They're investigating, Romaine, investigating.
I like that. but I mean, is the idea here that this is now going to be real competition for the banks? You think the banks will allow that to happen, or is this just, I don't know, is this going to be some sort of compliment?
You know, it's funny, talking with the Raytheon CEO yesterday, Greg Hayes, and he said, you know, you hear these things about transitory. What does that mean? These are executive CEOs who have to make decisions. Transitory, is it 3 weeks? Is it 3 months? Is it 6 months? They've
Did he talk to you? Wait a minute, I'm sorry. Did the Raytheon guy talk to you about stablecoin? That's what we're talking about. Tim, you got a tie on. Explain this to me.
Look, I think Fed Chair Powell was asked about this yesterday. I think he made a lot of news when he said that, you know, there wouldn't necessarily be a market for Bitcoin or stablecoins if the United States had a digital currency. When's it going to happen?
Hey, you know, Tim, we used your space background today on the close.
It looked beautiful.
And it was beautiful.
To the moon, right?
I didn't know you had a space background.
He does. Tim is.
Man, some people have everything.
A star, literally.
He is a star. All right, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. Join us again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You wear a tie and look at what happens.
I know. It's for our radio audience. Romaine noticed that I was wearing a tie. Carol, let's just wrap up where we were with the close today. Dow finishing in the green, higher by the tune of 0.1%. The S&P 500 lower 0.3%. The Nasdaq down 0.7%.
And we are waiting Alcoa earnings. They should cross. They are expected today after the closing bell. Not yet crossing. I don't see them at the Bloomberg terminal, but we'll see what they have to say. I mean, this is one of our commodity players, and so they are up 50% so far. Alcoa. Wow. So we'll get an idea of what they are seeing in terms of supply chains, production, and their outlook.
That is what I want to hear, supply chain.
Right?
And outlook, yeah.
Because it's not, we think everybody's having bottlenecks. It's not necessarily the case.
What are they hearing from customers?
Exactly. All right, that's going to do it. You have a good evening.
Thank you. I'll see you tomorrow.
We'll see you. It'll be Friday. All right, let's get to world and national news for that. It's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is hosting German Chancellor Angela Merkel at the White House today, and they'll be holding a joint news conference in just a few minutes, and you can listen right here on Bloomberg Radio. This is Merkel's 23rd and likely final visit to the U.S. during her 16 years as chancellor. It's expected the two have been discussing things like the pandemic, as well as Russia and China. President Biden earlier today announced that families in America are now seeing relief in the form of child tax credits that are arriving today.
For every child under the age of 6, a parent will get $3,600 a year. For every child 6 to 17, they'll get $3,000 per year.
Biden wants the child tax credits to be made permanent. The administration is launching a new website to counter ransomware in the U.S. White House Press Secretary Jen Psaki says the Department of Homeland Security and the Justice Department have teamed up to create StopRansomware.gov.
A coordinated federal government one-stop resource for public and private sector organizations to reduce their risk of ransomware attacks.
And Psaki says the State Department is offering a reward of $10 million for help in finding those engaged in malicious cyber activity. Senate Majority Leader Chuck Schumer has set a Wednesday deadline for agreements on a duo of packages carrying President Biden's infrastructure and economic agenda. Next week's deadline puts pressure on Republicans and moderate Democrats to decide whether to support the plans. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
Hi, thank you very much, Nancy Lyons. Just getting the latest numbers out of Alcoa's second quarter sales beat estimates. Sales coming in at $2.83 billion. Estimates were for $2.64 billion. Those headlines now crossing on the Bloomberg Professional Service. It was a down day on Wall Street. Choppy session session. Stocks decline, Treasury yields turn lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. Energy, consumer discretionary, and tech shares weighed on the S&P 500 index. S&P down 14, a drop of 0.3%. The Dow up 53, up 0.1%. Nasdaq down 101, down 0.7%. The Nasdaq 100 index also down 0.7%. 10-year up 14.30 seconds. 10-year yield 1.29%. Gold today, spot gold up 0.1%, $18.29 the ounce. And West Texas Intermediate crude down 2.3%, $71.50 a barrel on WTI. I'm Charlie Colleton. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So you are listening to Bloomberg Business Week. Earlier this year, I think it was January, we caught up with a member of the who was a member of the sixth generation of the Martin family. We're talking about Chris Martin. That family, of course, behind the Martin Guitar Company. They've been making guitars for nearly 2 centuries, a family business still run by the family. And we wanted to kind of get an update on the business and how they are doing post-pandemic, or at least as we increasingly get out of it, and also talk about some of the innovations going on at the company. So delighted to have with us Jackie Renner. She's president of CF Martin and Company on the phone in Nashville, and she's there for a reason, which we'll get to in just a moment. Jackie, how are you?
Carol, I'm fine. Thanks so much for having me today.
Well, it's great to have you here. My husband has a Martin guitar. It's got to be one of the most beautiful guitars that I've ever seen. The acoustic sound, I love it. I love it. He loves it as well, loves playing it. We did talk with Chris Martin back in January. So it's 7 months ago. What's business been like this year?
It's been booming, and it's been booming throughout our industry. During the pandemic, people found solace in learning to play new musical instruments, and a younger generation really started to embrace the instrument. So we've been expanding, we've been supplying, and we hope it's gonna last for a good number of years. Right now, we're so thrilled that so many people want to get engaged with music.
You said the word supplying, which we have been nutty about, like supply chains. Your supply chain, do you have all the woods, the stuff that you need to make guitars?
So woods, we keep strategic inventories of our woods because they're precious, and you got to be, you really have to think long and hard about the forest. When you get to some of the other parts and pieces that go into guitars, we're suffering from the same supply chain challenges that I've been listening to on the radio for the last several months, and we really think that's going to continue for a long time, not only because of the supply chain disruptions globally, but also because the ever-increasing demand for guitar parts throughout the industry around the world.
So what does that mean for pricing? Are guitars going up in price?
We did put a price increase through this summer. We see component prices going up and up continually. So depending on how the inflationary impacts on the business continue to occur or to stabilize, we'll have to follow suit. But we want to make sure that instruments remain attainable for people to play them, because it's about inspiring musicians to play music. So
we all need it right now.
Oh, you bet.
Well, it's interesting. What about workers? Remind everybody. I mean, a lot of guitars. I mean, I know you guys. I think increasingly some is automated, right? But tell me how that works, and whether or not your need for workers, whether it's being met, or if you're having to pay up to get them.
So first of all, we have 2 factories. We have one in Mexico, and we have the original factory in Nazareth, Pennsylvania, which has obviously been modernized over the last couple hundred years.
Right.
Now, we do automate things where it improves the quality and the outcome of the guitars, things that you couldn't do if you're building a guitar from hand. But craftsmanship and hand building is still important in both of our factories. So with the increased demand, we have added a second shift in Nazareth. We've always had a second shift in Navajo, and we continue to hire. It is challenging to get people to come into a manufacturing environment, but because of who we are and the legacy we have in the guitar industry, the people that have a passion for music and want to get involved in Martin Guitar do come and work at our factory. So we continue to staff up in both factories.
All right, continue to staff up. Do you have to pay more to get them?
We have shortened the probationary pay piece, but not really.
Really? So then, in other words, the workers you want, you can get without having to, the stories, Jackie, that are out there of even whether it's fast food chains or restaurants or, obviously the, financial sector, we talk a lot about investment banking, bonuses and things like that. But even in some of the service jobs where people are paying up and offering bonuses and other perks and benefits, you don't have to do any of that to get workers?
So what we do is at Martin Guitar, you come and you join a family. We are not the kind of company that will hire when we're going up and fire when we're going down. When we went through a downturn in the guitar industry in 2016, 2017, we all went on shared work. We all hung in together. And that's a really, really important part of being part of the Martin Guitar family. In addition to that, our company has profit sharing and has had profit sharing for over 30 years. So when the industry is doing good and we have a lot of demand, we are competitive in our pay, and we're very good about our benefits for our employees, and it's a stable place to work. So people will decide one or the other. In the warehouse, you can get warehouse work, and you might get it at a couple dollars more an hour, but when the business turns down, it's gone.
I want to talk about some of the innovation you guys are doing. But before we get to that, I am always curious about leaders like yourself. What has changed in how you approach, how you manage this company, having gone through the past year, where I bet initially you thought, oh my God, what's going to happen to our business? And then it was like, oh my God, look what's happening to our business, and it took off. And even, meeting demand, of course, during a pandemic is a whole other set of challenges. So what has changed in your thinking as a leader, how you manage, and maybe how you approach your business going forward?
So for me, Carol, what's come to the fore is the absolute importance of being agile, being able to adapt, and be willing to test. And if you think about Martin Guitar being an almost 200-year-old company full of tradition and the ways we've always done things, the pandemic actually gave us an opportunity to take those shackles off and say, what could we really do better? So there were more leaders within our organization that organically sprung up, more new skills that people embraced much more readily than they would have pre-pandemic. And our challenge now and our opportunity now is really to continue to embrace that and to continue to have a curious mentality for improvement and evolution inside the company and with our customers.
So you are, I feel like, a rare CEO, a rare woman who's a CEO. And certainly, they're increasing, especially in smaller companies and mid-sized companies, but certainly, it's in many ways what some would say the music industry is still a man's world. What's that experience been like for you?
Well, it was interesting since I was...
Or am I wrong? Is it not a man's world?
There's still primarily the music industry, the music products companies are run by men. So many of these companies were started decades ago by men, and there's some women that have taken over their father's firms, and there are some who have started their own. The one thing I can tell you about joining the musical products business is this is a passion industry, and that plays really well to having what you would hope would be the empathy that would make people feel welcome in joining a new industry, as opposed to being somebody who is unique and on the side and they don't want to interact with. Of the different industries that I've been in my career, Carol, running companies, this has been the one where the aspects you would think about being a woman and being empathetic, having passion, bringing your all to your job really has a place to be able to be successful. And
what do you mean? What do you mean?
Well, because listen, if you love music and you love the arts, and you go to school and you don't know what you're going to do, and you think you could teach and you think you can play, but you find out there are 1,000 different ways to be able to play in the music industry through companies like CF Martin. What a joy is that? And as you develop your leadership skills, when you're working with people who are so passionate about what they do, it's an incredibly rich environment to help new leaders grow up and new leaders find new ways to help Martin and other companies in this industry really evolve.
So are you saying it's been easy for you?
Not all of it's easy. You're still running a company, right? So, but the industry is welcoming to people that really have passion for it.
No, and I get that. And forgive me, I think I called you CEO. I don't want Chris Martin calling you up and saying, hey, Jackie, don't get any ideas. I know you're president of the company. So let's talk innovation, because we've been teasing ahead and talking about your Earth guitar. What is that?
So the Earth guitar is, the double L is the model, Earth guitar. It is 100% Forest Stewardship Council certified instrument. So what does that mean? It means that the woods and the pieces that have been put into that guitar have a chain of custody that certifies by a third-party agency that no forests were clear-cut, that no labor was used that was inappropriate, that this is an instrument that will help the earth sustain itself rather than deplete a very precious resource. It also has no plastic in it at all. Even your bridge pins and other things that would typically have it. The only thing that it has on its metal is the strings and the tuners. So it's important to Martin and every acoustic guitar maker to really take care of the organizations, the companies, the communities around the world that wish to grow hardwoods that are tone woods, and it's a very small subset of all the lumber that is felled around the world. And what we and others in the industry do are to try to develop ways to give back to those communities, to encourage them to grow and to harvest those tone woods sustainably. Because if they need to, what is called clear cut, cut down a forest, sell that lumber, that land is scorched.
Yeah.
And we lose that's what happened in Brazil, and that's why many, many years ago, Brazilian rosewood became prohibited.
You know, it's interesting. I've been talking with a bunch of CFOs and chief sustainability officers at Cisco, at Belvedere Vodka, at AB InBev, increasingly putting sustainability initiatives in because it is the right thing to do. It makes financial sense, and it's increasingly what their clients and customers want. Do you believe that the, CF Martin customer increasingly wants a guitar that they want to know that it's from sustainable sources and it's not impacting the environment? And are you aggressively as a company moving towards that?
So we've been focusing on sustainability of our resources for the longest time. This even goes back prior to Chris being CEO of the company. At the times when many decades ago they used ivory on guitars, and Chris's forefathers said, "No, we can't do that." Now, I think I think overall that many consumers want the manufacturers to say that they're doing things that are for sustainability, zero carbon footprint, blah, blah, blah.
Right.
We're working on those things because it's part and parcel of what we believe is the right thing to do before sustainability became a big topic. But I'm so thrilled that many companies are embracing it.
Me too. Jackie, thank you so much. Good luck. And I know you're on the ground in Nashville for NAMM, the National Association of Music Merchants annual event happening in person after going virtual last year. So the first time in a long time that the music industry there going face-to-face. Jackie Renner, president of CF Martin. We're talking about Martin Guitar, as I mentioned, on the phone from Nashville. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So you know from listening to us and watching us on YouTube, also on Bloomberg TV, just going to Bloomberg.com, we are all about, you know, those big tech companies, those big companies that are looking to really kind of rule the world. We talk about them every day, and they just get bigger, and they also control a lot more information. Well, we're going to get into a conversation about them ruling the world and really kind of what we can learn from them. We'll get to that with the author of a new book that is entitled Everybody Wants to Rule the World. First up, though, let's get to some of the news after the closing bell. Here is Charlie Pella.
Hi, thank you very much. And a bullish sign for the U.S. airline industry. Headlines from the Bloomberg Professional Service. American Airlines canceling extended leave for 3,300 flight attendants. Those flight attendants at American will return to work in November and December. American says that demand surge is behind those leave cancellations. So thousands of flight attendants at American Airlines back in the skies as American cancels extended leave for 3,300 flight attendants. Earnings after the bell. Alcoa reporting second quarter results that beat analyst expectations. The aluminum producer is boosting its forecast for aluminum shipments this year as reopening economies lift demand for everything from washing machines to beer cans. American up now by about 0.7%. Stocks decline today. Was a mixed session. Treasury yields turn lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. Anna Hahn is equity strategist at Wells Fargo Securities. She was our guest right here on Bloomberg Business Week.
So it's a mixed bag where you have part of the market concerned that, you know, accommodation is not enough. It's got to stay on because inflation is too transitory. But you have the other part of the market thinking, hey, growth will continue. So it's a mixed bag today.
Anna Hahn of Wells Fargo. Today we have the S&P down 14, down 0.3%. NASDAQ down 101, lower by 0.7%. Dow Industrials up 53, up by about 0.1%. 10-year yield 1.29%. Gold up 0.1%, 18.29 the ounce. West Texas Intermediate crude down 2.2%, 71.49 a barrel. Verb Technology jumped today as so-called meme stocks favored by retail investors on social media platforms continue to rally. Verb shares up today by 28.5%. And briefly, Membership Collective Group shares fell in their first day of trading. The company behind the trendy Soho House members clubs fell after raising $420 million in an IPO. Today we had shares MCG on the ticker. Membership Collective Group lower today by 9.6%. I'm Charlie Pella. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, our next guest writes that the rise of the digital giants requires a different mindset for success, and that understanding those digital giants, their DNA specifically, will help the next generation of leaders prepare for an environment where everybody wants to rule the world. That is the title of his new book that is just out. Everybody Wants to Rule the World, Surviving and Thriving in a World of Digital Giants. Joining us right now is the author, R. Ray Wang. He is founder of the Silicon Valley-based Constellation Research, co-host of Disrupt TV. It's a weekly webcast, and he looks at disruptive technologies and new business models. He's an advisor to global companies, and he joins us on this Thursday on the phone in Las Vegas. Ray, nice to have you here on Bloomberg Business Week. How are you?
I'm doing well. Thanks for having me.
Well, it's great to have you here. What's your last year been like?
Last year has been crazy, watching companies go from digital channels to digital business models to digital monetization, and trying to do it all from home and trying to do it with, like, you know, the most interesting, you know, work policies, technologies, and of course, you know, shareholders, and of course, amidst a pandemic. So.
How surprised have you been about the kind of the rapidity and how the cycle of going digital has just picked up? You know, we talk about we've done 5 years, 3 years of changes or adaptations of digital strategies in 1 year because you had to.
It's because of choice. If you didn't do that, you would be out of business. The small store that was taking orders by fax, that wasn't going to happen. The large companies that didn't know how many employees they had or where their supply chains were going to be, they fell apart. The companies that couldn't figure out pricing because they figured no demand signals, they had no analytics or insight, they weren't able to survive. And we saw that. And the companies that have emerged over the last 3 to 4 months have come back stronger. And that's the most exciting part about this.
Well, and your new book that looks specifically at these digital giants, what do you mean? Are you talking about the usual suspects specifically, or give us some clarification of what you wanted to look at and who we need to kind of keep a close watch on?
Gal, it's a great point, right? It's not the usual suspects we were looking at, like the FANGs plus Microsoft, but what we're looking at is that emerging class of digital giants, the Epic Games, the Robloxes, the Coupangs, the Financials, the Robin Hoods of the world, Airbnb, DoorDash. They all have distinctive business models that are very, very different than what digital transformation could do on their own. For example, there are 5 things that are important. It's really about disintermediating customer account control. They take the customer relationships, they aggregate it, they own it. If you look at DoorDash versus Domino's Pizza, and Domino's is an awesome company. I mean, they're the poster child for digital transformation, but you might order a pizza from them once a week. Some people order from DoorDash 3 times a day, and that aggregation of businesses and customers over time allowed them to gather more data. And data is the power behind a lot of this. They know that in your zip code, Carol, that people like Thai food more than Italian. In this other zip code, they like Chinese food more than Indian food. And they use that data to maybe build a ghost kitchen, maybe get better at targeting. And then they start building big networks. Small restaurants could probably have 100 or 1,000 customers. These companies have aggregated millions of customers, sometimes tens of millions of customers, in other cases, hundreds of millions of customers. And by doing that, they have that network effect. And then, of course, they understand digital monetization, whether it's ads or search or goods or services or memberships or subscriptions. They've figured out where they want to play. And then here's the kicker. They can lose hundreds of millions of dollars a year, but so long they're growing market share, their shareholders don't care. And that makes it so hard to compete against them if you're a traditional business.
Sit tight for a second, Ray. We're going to take a little bit of a break, do a little bit of news, and then we'll come back and continue the conversation. We are talking with Ray Wang. He's founder of the Silicon Valley-based Constellation Research. We mentioned he's got a book out, Everybody Wants to Rule the World, Surviving and Thriving in a World of Digital Giants. We'll get back to that conversation. In the meantime, a headline crossing the Bloomberg: ServiceMax has agreed to merge with a special purpose acquisition company. We're talking about a SPAC. It will take the maker of software for field service technicians public. This is coming from officials at the companies. It's being reported by Dow Jones. The software company's current owners include the PE firm Silver Lake, GE, and the venture arm of business software giant Salesforce.com will merge with Pathfinder Acquisition Corp in a deal that values ServiceMax at about $1.4 billion. So again, expecting to unveil that transaction later Thursday, but this is coming specifically from Dow Jones, so we'll look for confirmation of that headline. Again, ServiceMax to go public in a $1.4 billion SPAC deal, and this is coming from Dow Jones. Right now, let's head to D.C. and a check on world and national news with Nancy Lyons. Hey, Nance.
Hey, Carol. Eligible families are receiving money today from the expanded child tax credit. They're receiving up to $300 a month for each child under 6 and up to $250 for children over 6 and under the age of 18.
It's one of the largest ever single tax cuts for families with children. And it's a reflection of our belief that the people of this country who need a tax cut aren't the folks at the top. They've got plenty of tax cuts. They're doing just fine.
Biden says it will cut childhood poverty rates in half. Senate Majority Leader Chuck Schumer is pressuring lawmakers to reach agreement by next week on a pair of massive domestic spending measures.
I've talked to some of our Democratic members of the bipartisan group. They're making very good progress. There is no reason why we can't start voting next Wednesday.
Schumer says it is time to make progress. Senators from both parties have been struggling to reach a final agreement on a $1 trillion package of highway, water systems, and other public works projects. Democratic senators are working to reach agreement among themselves on a budget blueprint that envisions $3.5 trillion in spending for things like climate change, education, and an expansion of Medicare. It was called the worst mass shooting ever at a U.S. newspaper. Today, the man responsible for killing 5 journalists at the Capitol Gazette in Annapolis, Maryland, was found criminally responsible for his actions. The jury of 8 men and 4 women did not buy the defense argument that Jared Ramos was insane at the time of the crime and could not understand the criminality of his actions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I want to get to 2 stories on the Bloomberg. Charlie Pellet joining me right now, and I've got I'll connect them for you. First of all, Ashrat Carmiel of Bloomberg News follows real estate here in the New York metro area, commercial, residential. She's got a story, Charlie, talks about competition for homes in New York's Connecticut suburbs. We've talked about this before, you and I. It is so fierce that more buyers than ever are agreeing to overpay big time.
Indeed, and I can't wait to hear you connect the dots on this one because I'm at a loss. We got an IPO, we've got real estate. Let's focus on Connecticut, specifically Greenwich. That is the wealthy town favored by many Wall Street execs. 28% of purchases were for more than the seller sought. That's a report from Miller Samuel and brokerage Douglas Elliman Real Estate. Worth repeating, 28% of purchases for more than the seller sought. Greenwich, towns such as Darien and Westport, 54% of home sales above the asking price.
Yeah, exactly, right? So unbelievable. And you and I have been talking about this, right? As individuals are leaving the cities and they want more room outside of these major cities, especially we saw this during the pandemic, it just continues. So we're seeing prices, particularly Connecticut, New Jersey, Long Island, they're all being bid up. In the meantime, I
was just about to say, I figured out the link here. Mark Wahlberg can now afford a home in Connecticut.
I love that you think like I do. That just makes me so happy. Marky Mark, exactly. And listen, he just scored a big return on his pre-IPO F45 fitness bet. Check it out. The Hollywood actor and producer among the big winners from the IPO of F45, Training Holdings, this week raising $325 million after selling more than 20 million shares at $16 each. Stock debuting, trading at 17 on Thursday. So it looks like a profit of at least $200 million for the investment vehicle of the superstar.
And indeed, perhaps a Dave Wilson moment here. The ticker symbol on this company, FXLV. Go back to Latin. F45.
I know. Don't you love it? It's so clever. All right, good stuff. Marky Mark, he can afford those pricey Greenwich homes. Charlie, thank you so much. You're listening to Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleto. Mixed Thursday energy, consumer discretionary, and tech shares weighing on the S&P 500. Stocks declined. Treasury yields turn lower again as Fed Chair Jay Powell's persistent dovishness raises concern about the sustainability of the economic recovery. S&P down 14, a drop of 0.3%. The Dow up 53, up by about 0.1%. Nasdaq down 101, lower by 0.7%. 10-year up 14.30 seconds, 10-year yield 1.29%. Gold up 0.1%, 18.29 the ounce. And West Texas Intermediate crude down 2.1%, 71.56 a barrel on WTI. Netflix's foray into gaming is raising more eyebrows than excitement among analysts today. Netflix shares down 0.9%. GameStop, which sells video games, lower today by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest at this hour, Ray Wang. He is the founder of Constellation Research. He's got a new book out. It's called Everybody Wants to Rule the World, Surviving and Thriving in a World of Digital Giants. He is still with us on the phone in Los Angeles. You were talking about data and the data domination, and it's not the typical firms that we all talk about, Ray, when it comes to data. It's not the big FANG stocks specifically, which are now in regulators' crosshairs around the world. But you talk about the Robinhoods, the Airbnbs, the DoorDash. These are the ones that are increasingly accumulating data. And what do we need to learn from? What do we need to be wary about?
Yeah, what we need to know is that they're competing on data, and that is the heart of every one of these digital companies is the fact that they've got a data-driven digital network. That's the 100-year platform that anticipates what a customer wants. It identifies a trend that hadn't been thought about. It mitigates a risk that someone can't anticipate. And that's their heart. They build that information insights over time, and soon every company is competing on a concept we call decision velocity. You and I make a decision per second. It could take us 2 weeks, a quarter, even a year to get something out of management committee. But machines are making decisions 1,000 times per second. Mm-hmm. And that asymmetry is causing this decision velocity that is required. Every company is going to have to make faster and faster decisions. The decisions that are being brought in are creating a competitive moat. And that information in that business graph, like social networks have social graphs that tell you what people are going to do or help with the understanding, that business graph is powering their AI and their machine learning engines, which allow them to be smarter. Those are the brains of the operations over time.
It's interesting you bring that up because a great conversation I had with the Raytheon CEO, Greg Hayes, yesterday, and I highly recommend everybody go to our podcast feed at BloombergBusinessWeek.com and Bloomberg.com to check it out. But he did talk about increasingly, too, the use of AI when it comes to defense and helping to make those decisions, and that's kind of where we're moving. Are you basically saying is the net, the payoff here, that those companies that are using technology, using their data, using AI, making those decisions instantaneously in terms of what's going to happen to their consumer base or what their consumer base wants, they are going to have the advantage going forward, and they need to be copied, basically?
It's true. You're right, Carol. It's not just a 10x advantage, it's a 100x advantage because they can move faster, they have better information, they can act on that information, and that gives them an advantage. And if you're a smaller business, you're going to want to plug into one of those networks. But if you're a regulator, you're going to want to think about what you can do to improve competition when that data aggregation is concentrated by such a few group of individuals. And that's where it gets interesting.
So I think about our audience, Ray. Very smart, very locked into the financial market. A few months ago, I was sitting down with Kathy Wood, and I think at that point, that week, they had, gotten out of their shares of Apple, and she's like, that's maybe not the forward. That's not the companies that I'm going to be focusing on. I'm looking for the innovators, disruptors. That's her strategy. So for our investment audience, how should they take the information that you're presenting here and run with it?
Yeah, it's important to find the next group of digital giants. We know tech is where the growth is. We've seen the shift from value investing back to growth stocks again. We've seen the reflation trade go back into big tech. But not all big tech companies are created the same. And that's the important thing. You're looking for companies that have actually figured out how to disintermediate customer account control, companies that compete on data, companies that have a long-term mindset where they can lose money but gain in market share, companies that understand digital monetization, and then companies that understand how to build fast networks. Those are going to be the next winners in the digital economy.
So are you saying Robinhood Markets is going to be one of those?
Robinhood Markets could be one of them. Starlink is going to be one if they do go public. If you see what happens, with the Gojek, companies in Indonesia, those are one of those as well. What they're building out in Reliance in India is going to be one of those. Roblox is a great example of that. Epic Games has that capability as well. So a lot of opportunities coming up.
Well, and it's interesting, you mentioned a lot of overseas companies. I do think we talk a lot about the emerging markets, and that's where you see increasingly companies that are started, they're innovators, they're disruptors, because those are markets that really need something, an urgent need. And we've seen that certainly in fintech play out when it comes to some of those emerging markets. Is that where you really look for the innovators in this space? Is it going to be a geographical difference because that's at a necessity or not necessarily?
The geographical markets are going to play a role, but at some point, the regulators in each country are going to ensure that another country's big tech giant is not going to invade their country, and I think we're starting to see that happen around the world. You're also seeing governments regulate the big tech companies a little bit more for fear of that kind of dominance and power, and so you'll see companies that emerge for regional winners. For example, Amazon's going to have a tough time getting into South America or getting into Asia. It'd be very hard for them to battle there, but they might have a shot in India, but even that looks very limited. And so there are geographical constraints in a lot of these types of companies.
So is that
the regulations?
Is Amazon a company that gets crushed? Because you are looking at the companies that you think will ultimately thrive in this environment. You've mentioned a couple of them. Who gets crushed? Is it an Amazon going forward? They're huge now, no doubt about it. Here we are, getting ready to watch Jeff Bezos go into space, and has created incredible amounts of wealth, certainly for his company and for himself. And it's a stock that's just been off the charts. But is that a company that ultimately gets crushed in your view?
No, I actually think Amazon's one of the winners. It's because the ethos and the culture inside the organization. There's a fear factor of always failing. They always start thinking about working backwards and trying to innovate into new markets. The only thing that will stop Amazon is really regulators and other industry lobbyists who do not want Amazon in their industry. And that's where we're starting to see some of these antitrust bills play a role.
Hey, what about something like, I think I've talked a lot about the food chain. Should we be looking at companies that are playing into that, particularly are gathering data and tapping into the strains and stresses on our food supply chain as being some of the future winners? And just got about 30 seconds.
Short answer is yes, and that's why you're seeing a battle for Morrison's. That's why retail is a great place. That's why on the B2B side, the trading networks and the trade for commodities is another great space for those demand signals. You've got it, Carol. That's exactly the point.
All right, great stuff and fun to talk with you. Thank you so much. Good luck with the book. Ray Wang, he is founder of the Silicon Valley-based Constellation Research. His new book out, Everybody Wants to Rule the World, Surviving and Thriving in a World of Digital Giants. Just one thing to note, we are awaiting some comments from President Biden. He's been hosting German Chancellor Angela Merkel at the White House today, probably her final appearance at the White House before she steps down from her long-held position as the German Chancellor. She's done that for 15 years. Elections to replace her are in September. President Biden, by the way, the fourth U.S. president she has worked with. Several things that they're probably been discussing there at the White House, including the ongoing dispute between the U.S. and Germany over a Russian gas pipeline. We know what it's called, Nord Stream 2. So anyway, when we do hear from the president, we will take you there here on Bloomberg Radio. That is going to do it, though, for the Thursday edition of Bloomberg Business Week. We did see some gains in the Dow, up about 53 points. S&P just down 14 on the day. NASDAQ Tech, in particular, taking the biggest hit, down 0.7%, down 101 points. For the whole Bloomberg Business Week team, I'm Carol Massar and Tim Stenovic. Have a great and safe evening. This is Bloomberg.